And we're going to start, because this is where I landed, we're going to start with our closing disclosure. So just a reminder where we are, where I'm getting this information. If you look in Learn, Test, Pass, the 6B material, 6B is in boy. First off is your blank closing disclosure. I want to make sure everybody can hear me. Can everybody hear me? Everybody going to print one of these out, or at least one of these out for tomorrow night? Please remember to do so. Also, guys, remember to bring some blank paper tomorrow night too. I'll let you have some scratch paper. So the last thing we do before we take the test, we'll go over the rules and expectations of the exam, and then we'll take a break, and then we'll be ready to go. But if you could have that ready, then that'll help keep us moving tomorrow night. Do you have any questions about the blank CD or two? You're welcome to bring two. I just need to verify it all. And 2 pages of blank scratch paper and your calculator.
I do have a question. So when I printed mine out, and it might just be the settings on my computer, but mine did not print. You see how on your PDF, it's percent of loan amount points is like white, and then loan origination fee has been filled in the blank, and it is like shaded in blue. So anything that was shaded in blue did not print out for me. So I like wrote in just those like headers.
That's weird.
So I didn't know if that was okay. And I don't know if anyone else has had that problem, but my PDF did not print out anything that was like in the shaded, including like core
Like loan origination fee,
page 1 of 2. If it's typed in and not looking like it's shaded, then it printed, but everything else did not print. So I went back in and filled in what those were supposed to be according to, and I'm happy to send you like a picture of what
I'll definitely look at that tomorrow, but I'm good with that, Katie. Thank you so much for bringing that up. Did anybody else have that problem? That's really strange.
It could have just been my like PDF driver that wouldn't let me print it. But.
Yeah, sometimes they're funny, but thank you for asking, and we'll definitely, as long as you don't have any numbers filled in, which in order for you to do that, you'd have to have access to the
no, I don't have anything else.
And I don't think you do. So yeah, I'm good with that.
Thank you.
Yep. So blank CD, blank scratch paper, calculator, some kind of writing utensil. Of course, I'll let you have drinks, snacks, gum, mints, cough drops, whatever you need to help you get by. Gum, whatever. Okay. So, chat's blown up. No, you're just going to log on tomorrow night. You're going to log on to Zoom like you always do. And when we get ready for the test, I will put the link to the exam in the chat. So then you guys, before we take the test, you guys are going to shut everything down. You're only going to have Zoom open. And then I'm going to give you the link for the exam. And so now you're going to have 2 tabs and only 2 tabs open. Zoom, where I can watch you, and then you guys watch the exam. So if you haven't, guys, please remember that email you got from Lane. Our exam tomorrow night is on a program called ClassMarker. And so, yeah, that email you got from Lane, there's a little tutorial. I don't know how long it is. I don't remember, a couple minutes, but Jane does a little tutorial so you can take away the guesswork to know what that's going to look like for tomorrow night if you haven't taken an exam on ClassMarker. And Allison, to your second point there, I do want to see, clean space. I do want to know you have a clean space and that you don't have, vocabulary words or definitions taped to the top of your desk or something. So we're going to want to make sure that we don't have anything that could be. So if you're on a laptop, I'm actually going to ask you to lift it and show me your desk space. If you're on a desktop, obviously you can't do that. So we're going to go on the honor system. You're going to put your right hand up and you're going to swear to me that you have nothing on your desk that could be considered cheating. So we'll have to do a little one-on-one check-in time with everybody before we start the exam, just to make sure. And the other thing I need to say, thank you for accidentally bringing this up, but guys, I need the test tomorrow night to be a distraction-free zone. I need the people in your home to leave you alone, because if I see you talking to somebody, I can only assume you're talking about the test. So please talk with your family tonight, tomorrow, and ask that they give you that distraction-free zone, so we can get through that. So, Clara, if I could get you to throw in your, I don't know why it goes away. Some of them stick, some of them don't. Yeah, and I usually, so funny, because I usually do this big spiel about y'all's numbers make me feel old. Let me put my number in here so you can see how long I've been licensed. But yeah, Allison's got me beat. So let's see if I put mine in. There we go. So I don't have that spiel now. When did you get licensed, Allison? Do you remember what year?
2016. I'm sorry, 2006. I
2006.
said 16.
Yeah, okay. I was like,
2006.
yeah, because I was licensed in 08. So that looks about right. How many people
Yeah.
between us? Isn't that something?
Yep. And then I took a long break and
Now you're ready to jump back. You're getting in on the seller's market, aren't you? You wanted to jump in on this.
well, yeah.
Well, good. Well, we're glad you're back. So, all right. So we're going to work closing problem 4. Hopefully you guys have gotten a chance to look at this and this will go by pretty quickly. Remember what I said last week. If you can do this, then you'll be prepared for tomorrow night. So there's actually 5 practice exams. This is the one that I chose, but you got plenty of practice and learn, test, pass. Guys, I'm around all day tomorrow. So if you're studying tomorrow, if you have a question, if you're working these CDs and you have a question, please don't hesitate to reach out to me. So we're told the following information is used to complete the closing disclosure statement. When performing proration calculations, we're told to use a 365-day year. When performing interim calculations, it says you should not round off your figures. However, entries on any line of the closing disclosure should be rounded to the nearest cent. An incorrect answer cannot be obtained only because of rounding off amount. So in other words, the answer choices, the multiple choice, answer choices aren't so close that you can miss by rounding alone. So we're going to go through this line by line. We're not going to skip around. If we skip around, it's easy to skip something. By the way, tomorrow night when you guys take your test, the closing disclosure is going to be on the screen. You're going to have 4 questions and class marker does a question per screen. So you're going to have the closing disclosure 4 times, 1 for each question. So if you move on to the next question, you're still going to see that information while you're trying to answer those questions. My suggestion for tomorrow night is the first question you come to, go ahead and do the whole thing and then go through and answer using your multiple choices. So you have that, but you will have all the information for the disclosure on all screens, on all 4 of those questions. So first off, we got a sales price of $465,800. What are we going to do with that sales price?
Put on the top of page 2 under K and M.
Top of page 2. So we're going to do it as a debit to the buyer, K1. K is in Kelly. And this is a double entry. So it's going to be a debit to the buyer. And then under M is in Mary. It's also going to be a credit to the seller, to 465. So the sales price, this is what the buyer promises to pay the seller in exchange for the property. Debit the buyer, credit the seller. Questions on the sales price, K and M. Ooh, you're going the wrong way. see, there we go. Okay. We got a closing date of May 19th. I do suggest you guys put that date on both sides, side one and or page one and page two. Just kind of write it up there in the top margin. The reason I say that is because we know we're going to be revisiting this date several times. So maybe save you some precious test time if you need it, trying to find the date. Put it there where you can see it, circle it, underline it. I got an earnest money deposit of $5,000. What are we going to do with that earnest money deposit?
Put it under deposit in L1.
I heard, yep, deposit in L1. Earnest money is going to be credited back to the buyer. So an L is in Larry. We got an earnest money L1. We got an earnest money deposit of 5,000. Then I got a due diligence fee of 1,500. So Aaron says L6, credit to the buyer, due diligence fee, 1,500. Is there anything else we need to do with the due diligence fee? And then we need to debit the seller. So N is in Nancy. N7 is due diligence. Again, due diligence is another one of those double entry things. When we went under contract, let's back up for a second. When we went under contract, didn't the buyer hand the seller a check and say, here you go, this is for my right to terminate? So now that we made it, now that the buyer didn't terminate, we pretty much what we're doing is reversing that process. So now that we're here at closing, it shows up as a credit to the buyer and a debit to the seller. What questions do I have on that? Okay. I got financing. I got a loan for $419,220. Am I going to do anything with the loan amount?
Loan amount goes on L2.
So we're going to do the loan amount under L as in Larry, L2. Today, the day of closing, the loan amount is a credit to the buyer. Can they close without the lender bringing that money on their behalf? Not unless they got cash stuffed in a mattress somewhere. So today, the day of closing, that loan amount is going to be a credit to the buyer. The buyer's going to spend the next 30 years paying the lender back, or 15 years or 20 years, whatever the term of the loan is. So we're told we got 5.25% interest. Hang on to that. I'm sure we'll come back to it. There's a 1% loan origination fee, and then the sellers agreed to pay the half a loan at discount point. So first off, let's break down and let's look at these fees. All lender fees are always based of the loan amount. So my loan amount of $419,220, there is a 1% loan origination fee. 419, that's not right. 220. So 419,220. So I got a loan origination fee. %. And then we also have a half of a loan discount point. Remember, a discount point is just equal to the percentage of the loan. So if it's a half a loan discount point, We're going to take the loan amount times 0.5%. And we are going to get discount points of $2,096.10. So first, let's do what we know. The lender charges the borrower the loan origination fee and the discount points. Where do lender charges go? What do we do with lender charges?
All on page 1.
Back up on page 1, debits to third parties. And specifically A is in Apple, is our origination charges. So you got discount points, A1, 2096.10. And then we have a loan origination fee of 4192.20. Questions so far? Remember, you guys, the relationship is between the borrower and the lender. The borrower expects to collect this money from the lender. Now we got this side agreement that the seller and the buyer made on their own. So on their own, the seller has agreed to pay the buyer's discount points, but the seller can't pay the lender directly. The lender has no clue who the seller is. The relationship is between the buyer and the lender. So now what we're going to do, well, you guys tell me, how are we going to show on the settlement statement that the seller is going to pay the buyer the discount point or the half a discount point?
It's a debit to the seller and a credit to the buyer. So it's triple entry.
Triple entry. Did you know that was a thing before this class? Here we are. So now we're back over on page 2. Everything on page 2 is between the buyer and the seller. So now what we're looking at, and again, sometimes the confusion, L5 and N is in Nancy 8, where it says seller credit. I think sometimes that's a source of confusion. So if you just want to do a write-in and just call it like seller paid discount points, right? If you want to write it in something that you know what that is, makes no difference to me. All I wanted to make sure is that you get it somewhere in L. So the seller's going to pay the buyer's discount point. So on page 2, we're going to do a credit to the buyer. And then we're going to do a debit to the seller. So what we did, remember back up on page 1, we did a debit to the buyer. And then we came to page 2 and we did a credit to the buyer and a debit to the seller. How much is the buyer paying in discount points? How much are they going to pay?
$2,096.10.
But then they're going to be reimbursed. So at the end of the day, how much are they going to be paid?
0.
That's what we did, was cancel that out. In accounting speak, a credit cancels out a debit. Questions? Comment? So the problem with that, Allison, and the reason why we can't do that, because remember, these are debits to third parties. And the relationship is between the borrower and the lender. So the seller can't pay the borrower directly. the lender expects to collect their money from the borrower. I know that'd be a lot easier, right? Just have the seller pay the lender. But who's the relationship with? Again, remember, this is a side agreement that the buyer and the seller made. Honestly, wouldn't it have been easier if the seller just agreed to pay closing costs of $2,096.10? Sure, but then how much fun would that be, you know? So because of the way it's worded, because of what's going on, the buyer pays the lender their fees, and in this case, the seller's reimbursing the lender. Anything else on this? Can I erase the blue? Anybody have it? Okay. Then we got brokerage commission is 5.5% of the sales price. So the sales price is $465,800. Commission is 5.5%. So we got a total commission of $25,619. This is how much the seller is contractually obligated to pay for commission per the listing agreement. That's what they signed up for when we signed the listing agreement. Then we have a note. At closing, the listing firm will retain the earnest money as part of the brokerage fee. So when you get your check, when you go to the attorney's office after closing to get your check, the amount of your check is going to be the commission minus the earnest money deposit. Well, you guys cannot see that, of $20,619. Yeah, $25,619 minus $5,000. So the amount going to the third party, the debit to the third party, is down here under H, brokerage commission, H1. Your check is going to be for $20,619. Everybody with me? This is going to be made out to ABC Realty, for example. Before we finish this piece of it, let's talk about your end it, because I want to make sure you guys understand. I'm going to get you paid the full amount. I'm going to get you the full 5.5%. So you go to the attorney's office, you pick up a check for $20,619, and you run back to your office to turn it into your manager or your accounting department, whatever, so they can start processing it. The administrative that's handling all this, they are going to then transfer. Remember, the earnest money is still at the listing firm. The listing firm has it in their escrow account. So in order to make us whole, the listing firm is going to transfer $5,000 from the trust account to the operating account. And then from the operating account, they will pay you based on your commission split with the firm. So the money's there, it's just where we get it. So that's that piece of it. The second piece is the closing disclosure. Didn't the seller promise to pay $25,619? Wasn't that part of their listing agreement? So the $20,619 that's going to ABC Realty is a part of it. The other part that we need to do is debit the seller. And again, if you don't like, I mean, they say put it on N as in Nancy 1. If the words are tripping you up, then just put it anywhere in N. So rest of commission, the seller still owes, debit the seller $5,000. So now the seller's paid the full $25,619. They have some of it going to ABC Realty, and the rest of it, the rest of commission, is a debit to the seller. Double entry commission. Questions on this? Can I erase the blue? Got the figures? Okay. Then we got seller's loan payoff. As of closing, they still owe $388,450. Payoff of first mortgage, debit the seller. N is in Nancy 4. You'll notice, these debits to the lender, credit from the lender, these are on page 2. Because I understand the lender's a third party, but they're acting as an extension of the seller. They're acting as an extension of the buyer. So the credit for the buyer in L, and then the debit for the seller in N. It's not really a charge to close. It's just something they got to do in order to get all those liens cleared. So N is in Nancy 4 is payoff of the first mortgage loan. Homeowners insurance annual premium, who pays that?
Buyer.
That's right, because they're originating their policy today. So homeowners insurance annual premium. It's a prepaid under F is in Frank. F1. And they're going to pay $1,107. Private mortgage insurance premium for the first year is $1,485. Who pays PMI?
Buyer.
Buyer. It's also prepaid, so we're still under F as in Frank. It's mortgage insurance premium, private mortgage insurance, and it is $1,485. And then we have property taxes that are unpaid. So let's draw it out first. We're looking at annual taxes. And what's going to divide the year, what's going to split the year's closing, which is, anybody have that written on your paper? I did not write it on mine. It is May 19th. Seller owns the property the front part of the year. Buyer will own the property the latter part of the year. Taxes are unpaid. Did the problem have to tell you that they're unpaid? Closing's in May. Did the problem have to tell you that? No. When does the bill come out? Or when do the taxes due each year? September. So if you have a closing before September, the problem may not even tell you. This one did, so we know for sure that it's unpaid. But if it doesn't, if it's before September, there's no way they could be paid. So that means if they're unpaid at the time of settlement, the buyer's going to be responsible for them later in the year. Now, I understand they'll pay for it out of their escrow that the lender's holding for them. I didn't say the buyer's going to pay them at the end of the year. I said the buyer's going to be responsible for them at the end of the year. And they're going to be responsible for the whole year. So now we stop and ask ourselves, who owes whom? Buyer owes, that's right. Buyer owes the seller. So we're going to do a debit the buyer, credit the seller. And yes, September 1st is for our purposes, September 1st will be that. That's when they're due. I did that wrong. No. Actually, we did that wrong. If the buyer's going to pay him the whole year, then actually at settlement, the seller owes the buyer. It's going to be a debit the seller, credit the buyer for the period of time that they own the property. The seller is going to go ahead and pay the buyer their portion of the taxes for the year at settlement. So this is that much less money that the buyer has to bring to closing. Can I answer that later, please? We talked about that last night, but I'll be happy to answer that later as well. So now we need to figure out, I got 31 days in January, 28 days in February, 31 days in March, 30 days in April, and then the seller is going to be responsible for 19 days in May. So we can add up our days, in which case we get 139 days. The seller owes the buyer. Questions so far? Seller owes the buyer for the period of time that they own the property, which adds up to 139 days. Now we need to figure out how much. I know my annual taxes are $4,880. There's 365 days in the year. So I take 480 divided by 365. Get 13.369863. Big number there. We've already decided 139 days. So the seller is going to owe the buyer $1,858.41. Remember our origami? The bottom half of our page, page 2, is the debit the seller, credit the buyer. L is this buyer's credits, N is in Nancy's the seller's debits. So we're going to credit the buyer for the seller's portion of the taxes. And we're going to debit the seller. Again, that's that much less money that the buyer has to bring to settlement. Questions?
If this had been in November.
I'm getting there. Hang on to that
Okay.
for just a second. Questions on what this is? So the question comes in, what if this is after September? If it's after September and taxes have not been paid, what are we going to do? After September, the bills come out, taxes have not been paid. What are we going to do?
Do they have to pay the full amount? Does
Nope.
the buyer have to pay the full amount at closing?
Never, never.
I mean, I'm sorry. Is the entry to the third party on page 1?
So now we're paying it directly to the county,
Right.
and it's going to show up as a double debit. So you're going to have a charge to the buyer for their taxes. You'll have a charge to the seller for their taxes.
And then is there anything on page 2?
Not when you're doing a double debit. Guys, when you're doing a double debit, one party's not paying the other. Both parties are paying their fair share to the county. So if taxes have not been paid and closings before September 1st, it's going to show up as a debit to the seller, credit to the buyer. If taxes have not been paid and it's after September 1st, debit the seller, debit the buyer. Under H is in Heather on page 1. What we did here, debit the seller, credit the buyer. What other tax proration questions do we have? Or just proration in general? Can I erase the blue? You good? I got loan escrow deposits. There's 8 months of taxes, 2 months of insurance premium, and 2 months of private mortgage insurance. So with these, we're looking for, all we know is the annual figures that we have in the problem. So we need to go back up a little bit to find some information. So let's start with taxes. My annual taxes are $4,880. And I need to take annual taxes and break those down into monthly. So $406 gives us monthly. The problem tells us they want to collect 8 months. So we're going to have escrow taxes, 32, 53, 33. And then we want 2 months homeowners insurance. Again, if we go back up in the problem just a little bit, we're reminded that our annual homeowners insurance premium is $1,107. Get down to monthly. And they want 2 months. And then we got 2 months of private mortgage insurance. Again, go back up in the problem. My annual is $1,485. So we start with the annual with all of these. Didn't do what I wanted it to do. With all of these, we start with the annual. Divide by 12 to get monthly. And then just times it by the number of months the lender wants to collect for escrow. Questions on what we just did? We did escrow taxes, yeah.
If the problem had said at a renewal rate of a different number, you do not do the math. You just take the renewal rate.
You go with the renewal rate, that's right. Because what we're paying here for is the first year. What we're doing here is planning for next year, the year after that,
Right.
the year after that. So you go with the renewal fee, yep. This is money that the buyer owes the lender. So we're back up on page 1 under G is in Jerry. That's our escrows. So you got homeowners insurance. Uh-oh, I didn't keep which one. I didn't keep them in order. Homeowners insurance is the $184.50. Mortgage insurance is $247.50. And then taxes And you got, I mean, if
It's
you guys want to
33.
fill in all this stuff, X amount per month, you know, da, 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 you're welcome to. Thank you. Again, all I care about are the numbers in the right column. So if you want to come in here and say X amount per month for 12 months, right? I mean, you're welcome to do that. I want to see the actual numbers. That's what we need. Questions on the escrows? Can I erase the blue? We have it. Then we got a credit report fee of $45 paid at application. The appraisal $715 paid at application. Appraisal and credit report are under B as in boy. If you want to fill these in, get them in the right place. These are going to go under borrower paid before closing. So I have an appraisal of 715. I have an appraisal or a credit report of 45. You're not going to have a test question on the borrower paid before closing. Your test question is going to be the borrower paid at closing. So that's why I say anything paid before closing. If you need to put it in there, I get it. Just make sure you get it in the right place. The buyer's already paid for the appraisal and the credit report. We don't want to charge them again. Questions? Then we got miscellaneous expenses charged at closing to the respective parties according to standard practice, or has indicated. Interim interest. All of you, please, in a private chat, if we're going to closing on May 19th, when is the buyer's first mortgage payment going to be due? We're going to closing on May 19th. When is their first mortgage payment? Okay. So it looks like we got that. We're going to skip the first, which means there is no mortgage payment on June 1st, which means their first mortgage payment is July 1st. Interest is paid in arrears. So when they make that payment in July, they're paying June's interest. So what we're going to do for interim interest, the lender is going to get caught up. They're going to get the borrower caught up on what they owe them. Interim interest is always the day of closing to the last day of that month. Never ever go into the next month. So we got May 19th to the end of the month. So 31 days in May. Yeah, thank you. Thank you. So we're going to do this together. We got the 19th, the 20th, the 21st, the 22nd, the 23rd, the 24th, the 25th, the 26th, the 27th, the 28th, the 29th, the 30th, and the 31st. So we got 13 days that the buyer owes the lender for interim interest. the day of closing to the last day of that month. Then we need to figure out how much. So the loan amount is $419,220. And our interest rate is 5.25. So first we find annual interest by taking the balance, or in this case, the loan amount. $419,220 times the interest rate gives me annual interest. Annual interest, $22,009.05. Annual interest. The balance times the interest rate equals annual interest. And then we need to break this down into daily. So we'll divide it by 365. I get $60.298. We have already figured out that they owe for 13 days. So we take our daily interest times 13 to learn how much the buyer owes their lender for interim interest. The last piece of this, it's a prepaid. They're prepaying the rest of this month's interest. So we're going to go back under F as in Frank, prepaid interest, $783.88. Questions on this? That should be a 3. That was just a typo. 365 days a year. It didn't turn out the way I wanted it to. $365. Questions on interim interest? Can I erase the interim interest math? We have it. I got 2 insurance policies, one for the lender and one for the owner. What am I going to do with those? So, yeah. We're under C is in cat. Who pays for that? Know where to put it. C3. Who's going to pay for it? Yep. Buyer pays. Remember, they're paying for their lender's policy. Guys, please remember, because I know this gets confusing. The owner in this case is the buyer, because that's when their coverage starts, is when they become the owner. Does this make sense? They're paying for it at settlement. As soon as that deed's recorded, they're protected under title insurance. So under C3, we can add them up, 474 and 85. And under C3, we get 559. Attorney's fee is also under C as in cat. Who pays that? Yep. Buyer hires the attorney. So the buyer's going to pay that fee of $700. Deed preparation fee is also under cat. C as in cat. Who pays the deed preparation fee? I can't trick you guys today, can I? Seller pays to have the deed prepared. So C is in cat 2. We're going to make sure we get that under seller paid at closing. And it's $100. If the seller pays to have it prepared, who pays to have it recorded? And for those of you in the chat, I'm good, thank you. But you can do B and C, B and S, buyer and seller, B and S. I know who's going to pay to have it recorded. Yep. So E is in Elizabeth. I got a $15 deed recording fee. We got a $24 mortgage or deed of trust recording fee. For total recording fees, buyer paid at closing, $39. Excise tax based on standard rate. Who can remind me what the standard rate is? Yep. So excise tax is based off of the purchase price. So reminded our purchase price was $465,800. It's 5/100ths of the purchase price. So 465,800 divided by 500, 931.60. Oops. 931.60. The government doesn't like change. Excise tax is always going to be a whole dollar. So now that we have the 931.60, we're going to round up, and it's always up to $932. If this was 931.01, we would still round up to 932. Who pays excise tax? Yep. So still under E as in Elizabeth. E2. Seller pays $932. Wood destroying insects. I think that should say report, but wood destroying insects inspection maybe. Golly, $220. That pest inspection is proud of his service, isn't he? So $220 for a pest inspection. Who pays the pest inspection? Yep. So we're back up under C as in cat. Buyer pays at closing, $220. Home warranty, that one's easy. To be paid by the seller, $500. There's a place for the home warranty under H, as in Heather. Seller paid at closing, $500. And then each party has a courier fee. So there's still under H, as in Heather. H4 is the seller's courier fee of $25. And then H5 is the buyer's courier fee of $25. So this is what we're going to do. We're getting ready to take a break, but we're going to take a little bit of a longer break. Because also, in addition to our break, I want you guys to take a break. But in addition to our break, I want you all to tell me in a private chat, what is the buyer's tally of the buyer's J, tally of the seller's J. And I also want you to tell me on page 2, how much does the buyer have to bring to closing? And how much is the seller going to get from closing? So I want you guys to tally it up. If you've already done it, you just shoot your answers to me in private chat, please private. So we're going to take, let's see, 618, 628. Let's go to like 636. Everybody good? Take your break. But then at some point in the next 18 minutes, also tell me the buyer J, buyer paid at closing J, seller paid at closing J from the bottom of page 1. And then also how much is the buyer going to get from closing? I'm sorry, how much the buyer has to bring to closing and how much the seller is going to get. Any questions on what we're doing in the next 17 minutes now that I've probably been talking?
Yep, I have a question. So if we,
Sure.
and I'm mostly thinking of myself, if we did not have the insight to write this down on our own piece of paper, I guess we need to recreate it on our
Well,
own piece of paper to
Then I'll
tally
leave
it up.
it here for you and I'll try to come by every couple minutes and scroll down so you can copy it over or add it up. All right. Did I hear from everybody? No? So,
Julie, do you mind just going down a bit?
I'm sorry.
Do you mind just scrolling down? Thank you.
Oh, did you not get that on break?
I got most of it, but I missed one line.
Okay, so let's talk about what we got. This is the time for questions. So if there's anything about this that we need to ask, anything we need to know, this is the time to do it. Are you good? Do you have what you need?
Yes, thank you.
So let's just first focus on the buyer paid at closing. Let's talk about what we got here. So there is a loan origination fee. And there are discount points. That's what the A is. Discount points, percentage of points, and loan origination fee. The buyer's going to pay $700 attorney fees. They're going to pay title insurance premium both for themselves, the owner's policy, and the lender. So we added those up for a total of $559. The buyer's going to pay the pest inspection. They have recording fees, $39. Prepaids, they're going to pay for their first year's homeowner's insurance policy at closing. They're going to pay for their first year's PMI, private mortgage insurance at closing. And then they got their prepaid interest, which is also their interim interest. Then we have the escrow payments. Homeowner's insurance was 2 months. Mortgage insurance was 2 months. Property taxes was 8 months. So we gave them some cushion, originated their escrow account and gave them some cushion. And then we have, in this case, a $25 courier fee. So when we add up all of the buyer's J, everything on page 1, this will be a test question. I get $14,892.51. What questions do I have on the buyer paid at closing? This is the time. Okay. Then we're going to look at the seller paid at closing. The first thing we come to with the seller is a $100 deed preparation fee. They have $932 in excise tax. They're paying ABC Realty $20,619 for commission. They're paying the buyer's home warranty for $500. And then they have their courier fee. So when we add up everything on the sellers, we get $22,176. Questions on anything on page 1? So now we're going to go over to page 2. And the very first thing I want you guys to do, are we listening? The very first thing I want you guys to do when we get to page 2 is take the numbers from J on page 1 and go ahead and fill them in on page 2. I don't want you to forget about these. So under K is in Kelly, K3, we're going to put what we found for the buyer's J on page 1, $14,892.50. And then under N, as in Nancy, seller's debits, we're going to put their J, N2, $22,176. Questions on what I just did? They're easy to forget about. So go ahead and do them. As soon as you get the J on page 1, put them on over on page 2. So now if you take page 2 and you fold it long ways, we're going to focus just on the buyers. Buyers are on the left, sellers on the right. So what we need to do now is all add up all of K, which is all the buyers' debits. So they have the sales price and all their debits from page 1. So K, we get where'd it go? 480,000. And then we need to look at all the buyers' credits, which is L, as in Larry. So we got their earnest money deposit, their loan amount, the due diligence fee, the seller paid discount points, and then what the seller owes the buyer for taxes. We're going to add up all of L. And then to find out cash to close from the borrower, we take all of their debits minus all of their credits. And all of their debits minus all of their credits tells us that this buyer has to bring $51,018 readily available funds, no personal check, to closing. Questions with the buyers, how much they have to bring to closing. So page 2, folding it longwise, sellers are on the right. Sellers the opposite. We start with their credits. M is in Mary. Is all of their credits. In this case, they only have the purchase price. So we got $465,800. N as in Nancy is all of the sellers' debits. So we had everything we got from J, $22,176. They got to pay off their mortgage, $388,450. I don't feel like the seller had this property that long. What do you guys think? We're selling the house for $465 and they still got a balance of $388. They didn't have it for long, did they? So probably not going to get a lot of money back. Debit their due diligence fee, debit what they're paying for the buyers' discount points, debit the rest of the commission that they owe, $5,000, and then debit their portion of the taxes that they owe the buyer. So we add up everything in N as in Nancy. We get $421,080.51. So then your last question is cash to the seller, all of their credits minus all of their debits. Tells us that your seller is going to get $44,719.49. What questions do we have? Comments?
I'm off on that and I can't figure out why.
Let's see, need me to go back up?
Yeah, for some reason I got just a much lower number. For N, I got 398,904.50.
So, and you have closing on J, you have debits on the J. 22,176.
Oh,
Pay off a first mortgage.
yeah, 22,176. Okay. 1,500.
John, I would look at your numbers versus mine because that is a lot to be off just for rounding. So I feel like something might be missing. Maybe we're off by a day. It's not much. Seller paid discount points, commission, and then taxes.
I think it was J that I left off. So I'm good now.
Yeah, you guys, it's really, really easy to forget about. You think you're done with page one once you get these numbers, and you're close to being done to page one, but please don't forget to take those numbers and put them K3. K3 tells us J, and N2 is also J. Please. Again, I mean, we just did earlier, but I'll be happy to go over it again. So you guys tell me. No, you guys, I'm done talking about it. Y'all tell me. Closing is going to happen after September, and taxes have not been paid. What are we going to do? Let's hear from everybody. Closing happens, private chat. Closing happens after September, and taxes have not been paid. Have not been paid. After September. They have not been paid after September. Then we're going to do a double debit, and it's going to be a write-in in H. So we're going to have the seller's portion of the taxes, a debit, and the buyer's portion of the taxes, a debit. Anything after September have not been paid. Double debit.
Can you
The
go over that one more time? Sorry.
I'm sorry.
Would you mind going over that one more time?
Taxes have not been paid.
Okay. Not paid.
Closing is after September. Taxes have not been paid. Closing is after September. It's going to be a debit to the seller and a debit to the buyer. The seller's gonna pay their fair share. The buyer's gonna pay their fair share. The attorney's gonna send one check to Forsyth County,
So
double
in,
debit.
so in H7, you're just writing debit to
Yep,
seller.
it's just a write-in. Yep,
And then in H8, you're writing in debit to buyer.
yep.
So Julie, so if the problem for the test, okay, like I'm just mean for the test, if it doesn't say whether or not the taxes have been paid, then if it's after September 1st, like if it's September 2nd and onward, we would assume that they have been paid.
If it's after September, they need to tell you if the taxes have been paid or not.
So, okay, so for the test, it's going, if it's after September, then we should have additional
after-
information.
If it's after September, it has to tell you if it has been paid or not.
Okay, that's what I'm like worried about is like, what am I supposed to assume?
Well,
for
see,
the
and we don't
question?
like the word assume, do we? So the test isn't
No.
gonna allow you, the test isn't gonna allow you to assume.
Okay,
So,
great. That's
after-
wonderful.
After September, it'll have to tell you if it has been paid or has not been paid. If taxes have not been paid, and closing happens before September, have not been paid, closing happens before September. How's that going to show up? Private chat. Please tell me in a private chat. Have not been paid before September. Have not been paid. Draw it out. Have not been paid. Pick a date before September. Date. So taxes have not been paid, closings before September. Let's talk about what this means. That means the buyer going to have to pay them later in the year. The bill hasn't even come out yet. There's no way we can pay the taxes yet. So that means the buyer will get the bill in September and then they'll be responsible for them. They'll come out of their escrow that the lender has. What I'm saying is the buyer's going to be responsible for the entire year. So if the buyer's responsible for the entire year, who owes who?
Seller owes buyer.
So it's going to shake out as they debit the seller, credit the buyer. If you guys will look at the chat, I'm putting our little, should be loading any second now. There it is, our little cheat sheet. So if you need that, who pays for what? And at the bottom of the cheat sheet, it breaks down what to do if taxes have been paid, HOA dues, that kind of thing. I can't let you use it for the test. So you got about 24 more hours with it, give or take.
Julie, can you put in the chat again our YouTube channel?
There you go.
Thank you.
What else? I'm gonna have to move on in a minute, but last minute. I just put another article in the chat for you guys. Another article for the Real Estate Commission. And this kind of gets us back into where we were last night. And where am I? Right. This was from the commission's e-bulletin last November 2021. And, you know, this has been some cases across the country. To my knowledge, this hasn't hit North Carolina yet. But just to make us all aware, just be, you know, look this over on your own time, please. But this just kind of gives us in the insight of the dangers of brokers speaking on behalf of their clients and negotiating back and forth. And as you can see by the name of the article, it could be that our email communications could prove binding. So I think this is really important that you, again, you guys look this over. And bottom line, I think the best piece about this article is it's telling us to watch what you say and how you say it. Even taking it a step further and saying that your email or text does not create acceptance or a binding contract. So you don't somehow put your buyer, you know, be very clear that this is, I'm negotiating on behalf of my buyer or seller. This isn't the binding. So again, this is just more FYI, but this kind of goes in line of what we were talking about last night. And it also gives me another opportunity to talk about the importance of the e-bulletins that we get from the commission once a month. There really is relevant information, things that can help your business, things that can help keep you out of trouble with your business as well. So did everybody get that? You can download it and read it later on your downtime, whatever that is, right? So where we were last night, we're really close to finishing up chapter 11. And last night we left talking about submitting offers to sellers. We were talking about multiple offers. And the last little piece, well, the last little piece of this section is contract modifications and counteroffers. So as our contract tells us, 2T states it, that any change to the offer rejects the original offer. Well, 2 doesn't say that, I'm sorry. But what we do know with a counteroffer is a rejection. it's a rejection with a but. So once there's a counter offer, that offer is dead on the table. There's no going back. Some practical pointers. Any change to the offer should be initialed and dated. I understand a lot of times, a lot of these days, we're doing it this way. We're calling or texting or emailing with the other agent. Guys, please remember, if you're negotiating verbally, if you're negotiating on the phone, always follow it up with a text or an email. Because what do we document? Everything. So if we're going to be negotiating on behalf of our clients on the phone, we need to have that documentation, particularly any changes if we're negotiating on the paper. All those changes need to be initialed and dated by all parties. Counter offers need to be communicated. Well, yeah, because we already said it's a rejection and the new offer is being presented. So we're going to make sure we communicate all those counter offers. And if you are countering on the paper itself, after a while, it's hard to read and you don't know what that number should be. You got all those initials and cross throughs and dates and everything. So after a while, numerous changes, just go ahead and do a new contract once we've come to those agreed upon terms. So it's something that everybody can read. But make sure you keep the original. That shows our meeting of the minds. That shows that it went back and forth. How many of you, your firms have like dotloop, for example? Do you guys use dotloop? Have you guys noticed with dotloop, you can't delete anything? There's no delete. Once you put a file in, it's there forever. Guys, that's that way by design. That's not by accident. So it allows us, now if you make, have you put the wrong thing in the wrong loop yet? It happens. So that's where you just say, oopsie, wrong loop, and archive it, let everybody know that it wasn't supposed to be there. But that's designed that way. I'm sure DocuSign and SkySlope and all of them are the same way. Is designed that way to make us keep the originals, helps keep us honest. If round 2 of negotiations start back up, let's say we ask for repairs, for example, round 2 starts back up. We also need to modify in writing. We can either modify directly on the contract, or you'll remember we looked at the agreement to amend the contract. So the agreement to amend, if we're gonna, for example, in lieu of repairs, reduce the purchase price. And sometimes the seller's not countering. Sometimes the seller's saying, would your guys consider this? Would your guys do this? Maybe it's not the purchase price. Maybe it's the closing date. Maybe you put in that you wanted to close, I don't know, the middle of January, and they're asking for, the week after that, the 21st or something. So if the seller's just asking the buyer to consider terms, just make sure that you're clear that that's what it is. Just make sure that you're not countering. You're just asking if it's something that the buyer would consider. I think we could use, y'all remember that response to buyer's offer form that we looked at? The very last thing we did last night was the response to buyer's offer. I think that could be a good form for that. Of course, you can always use email and text communications as well. And then the last practical pointer we get, y'all probably tired of hearing this by now. Call your attorney. Guys, we got to stay in our lane. There's a reason. There's a reason why this keeps coming up over and over and over and over and over and over again. We tend to think we know just enough to be dangerous, don't we? And we got all sorts of power. We got a manual in our hands, and we got, BIC, and we got information, and we got, it's all right here, ready to go. But just remember to stay in your lane. When in doubt, call your attorney, CYA. The last thing we have here, delivery of instruments. First off, let's talk about what an instrument is. An instrument is pretty much any document related to this transaction. So let's back up. It usually all starts with the agency paperwork, doesn't it? We are working with real estate agent disclosure and our agency agreements. And then at some point, we get that buyer or seller under contract. So now we have the contract paperwork. And then fingers crossed, we take it to closing, and now we have closing paperwork. So the instrument is just going to be any document about creating agency, the offer or closing, and anything in between. We have a duty to deliver instruments to our clients and customers. Does anybody remember within how many days of our receipt? Yeah, I see a couple fingers pop up. We need to deliver instruments within 3 days of our receipt. So here's the deal. A lot of agents think they're going to wait until the very end of the transaction and send one PDF with everything in it. Commission rule says we have a duty to deliver instruments within 3 days of receipt. So once you get that agency agreement signed, you send it to the client and say, attaches our agency agreement. I look forward to working with you. I'll talk to you tomorrow, right? Once you get the contract signed, you send it to the client. Once you get the closing paperwork, you cannot wait until the end. We got to send it all within 3 days. And honestly, y'all, how difficult is it to send an email with a PDF attachment, right? That's all you have to do to deliver it. Are you guys going to document that you sent it? Are you going to keep that sent email showing the date and the time that you sent it? Well, yeah, because what do we document? Everything. And please keep in mind, you guys, my job is to deliver it. What they do with it when they get it, oh, that's not on me. All I have to do is approve that they delivered it. Are they going to open it? Are they going to read it? Are they going to save it somewhere? That's not on me. My job is to deliver it, and we need to deliver it within 3 days.
Hey, Julie. With SkySlope and the other software applications that we can use to sign documents, you often get, an email saying your documents are complete. You can access and view them here. Is that sufficient, or do we
Is
need?
that going to the client? Is the client getting notified, or?
Yes, the
Yeah, because I
client
know like in
can-
Dotloop, I can see an activity log, and it will say like Julie sent this document to Hermanda on this date and time.
Mhm.
So yeah, absolutely. If you're going through SkySlope, Dotloop, DocuSign, they should have some kind of record as that. So absolutely, that would suffice. How long do we have to keep records? Who remembers this? I'm all about throwing questions at you guys. How long do we keep records? At least 3 years. At least 3 years. I know, for example, Dotloop keeps stuff for 10. So we are well in compliance if you're using Dotloop. I don't know about SkySlope or DocuSign, but I'm sure they're similar. So yeah, as long as we have some kind of proof that we sent it to them. And then how many originals? I mean, we just need one. This is different now that we're living in the electronic world, because it used to be back in the day we were actually dealing with paper. Sometimes you would have, for example, the seller sign one copy and the buyer sign the other. So you'd have the same contract. You just have two, one with each. And that was always fine as long as the two were in fact the same. But today with electronic, it's a lot easier to keep up with and maintain. So, what questions do we have?
What about same day corrections? So, we send somebody something through Dotloop or SkySlope or whatever, DocuSign, and we realize that, something was wrong immediately after we look at it. Do we have to do an amendment, or can we just send it right back, correct it and send it back as long as we document that it's a correction?
Yeah, just document it's a correction and obviously get it to him as soon as you can, I don't know that there's a timeline specifically on that, except for as soon as you realize and as soon as you can. Yep. Guys, at the end of the day, we're human. You know what? Our commissioners are human. Do y'all make a mistake ever? Boy, I do. I could count up each day, right? So we're going to make mistakes. That's just who we are. So just once you realize you made it, just make it right. Just make it right. As far as sending docs to your BIC, if you're not using an electronic program like Dotloop, DocuSign, then yeah, you need to make sure that your BIC gets copies of all the signed agreements, agency agreements, contract, etc., within 3 days. Now, if you're using Dotloop, your BIC, you create a loop, your BIC sees it, right? So if you're using Dotloop, DocuSign, SkySlope, your BIC has access to that. If your firm is still old school and using paper files, then you need to walk a copy of that agency agreement to the BIC within 3 days. You need to get the BIC, because remember, whose listing is it? Whose buyer is it? It's not yours, is it? It's your firm. So your BIC, if you're not using an electronic program, your BIC absolutely needs a copy of it as well. So I got some questions for you guys. So please go ahead and set your private chat just to me. And you're going to tell me in a private chat, A, B, C, or D. Everybody ready? Are we excited? Woo. All right. Private chat, A, B, C, or D. Okay, so the amount of due diligence is determined by whom? It's an agreement by the party. It's completely negotiable between the parties. Here's another one, A, B, C, or D. Okay, so North Carolina provisional broker obtained an offer for a property listed with his firm, along with a check for the earnest money. The provisional broker should run, don't walk. PBs cannot walk around with somebody else's money. So while you're still a provisional broker, tomorrow you might not be, but today you still are. So if you get an earnest money check, get that to your BIC. As a full broker, you don't have to walk around with somebody else's money. PBs cannot, full brokers should not. Here's another one. Okay, so under standard offer to purchase a contract 2T, which of the following best describes the earnest money deposit? That, along with the due diligence, is the seller's liquidated damages. We agree to those when we enter into the contract. Legal consideration would be the purchase price. Remember, in order to have a legally binding contract, we got to have consideration. We could have a legally binding contract with zero due diligence and zero earnest money. Due diligence and earnest money do not make or break a contract. If the parties agree to zero, then that's what we're dealing with. Here's another one. If you receive multiple offers on a listing, you must present them all at once. I cannot favor one offer over the other. We got to be fair. Even if the offer is from another agent, or better yet, a buyer that you're working with in your firm, the highest offer, the more money, higher the purchase price, the more money we make, right? But there's more involved in just the purchase price. And that's why we need to not favor anything and go over all the terms, all the points of the contract or the offer with the seller. Questions? Because we don't, you can't, when do we have to deliver them? We deliver them when? Immediately, but within 3 days. So if you have, if you have an offer coming in today, and then a couple hours later, and then a couple hours later, you're going to get a lot of multiple offers. You may sit and choose to wait till the end of the day to present what you have in your hand. Does that make sense? Instead of bombarding your seller every 20 minutes. I got another offer. I got another offer. I got another offer. Isn't that the market we were just getting out of? So you may make arrangements to meet with your seller like once a day when they get off work at 5 o'clock for something. So then you're going to present everything that you have in your hand. So as long as we're presenting them, immediately, but in no event later than 3 days. And that's what that 3 days is. Your seller may say, please stop calling me every 20 minutes. Can't you just get with me once a day? Could you? Of course, but I told you about the listing we had. We were on the market for like 2.5 days and we got 45 offers. That seller was like, just wait, just wait and give it to me all at once, or we'll talk about it all at once. Other questions? Okay. Last little piece of chapter 11 is alternative land conveyances. Not everything's done in the traditional method. So there's some alternatives. And the first alternative method we have is something called an installment land contract. Now, with an installment land contract, the buyer's paying the seller the purchase price, but the buyer's not paying the seller in one lump sum. The buyer's going to pay the seller in installments. So they're going to make payments to the seller. In an installment land contract, the seller keeps the deed until that very last payment is made. The buyer gets equitable title, which means they get possession. They get the right to live there as if they owned it. If you buy a home with a lender using a mortgage, you have equitable title. So the buyer gets the right to live there. They can profit from it. They can do whatever they want to. But instead of paying, movement mortgage, for example, they're paying the seller. The difference between an installment land contract and seller financing is when the deed changes hands. So in seller financing, the deed changes hands. The deed becomes the buyer's, they become the owner, and then they're paying the seller. An installment land contract, the buyer doesn't get the deed until after that last payment is made. I've been saying buyers and sellers, they have more official names. The seller is known as the vendor, the giver of the installment land contract. The buyer is the vendee, the receivee of the installment land contract. Seller financing is purchase money mortgage. Seller financing. So in an installment land contract, there's two things going on. The seller, the vendor agrees to sell, the vendor agrees to buy. That's normal. That's what we're used to. But then there's this third piece out there where the seller is also acting as the financing device. So because we have this third piece out here, our standard offer to purchase and contract does not apply. We cannot use 2T. So if we're ever asked to do an installment land contract, what are we going to do?
Call your attorney.
Call our attorney. We do not have a pre-printed form for an installment land contract. So if buyer and seller agree to it, let me ask you guys this, listing agents, you got a property listed for sale and you get an offer to come in to do an installment land contract. Do you have to present that offer to your seller? Yes. Why? Because we present which offers? All of them. All of them. An offer to do an installment land contract is an offer. So now we have an attorney involved because this is good news, because there's some laws that go around installment land contract to protect the parties, and the attorney is aware. This is why we got them involved. You don't need to know the numbers, but specifically contracts for deed, installment land contract. Specifically, the seller has to record the installment land contract within 5 days of execution. The installment land contract agreement is on record. This prevents the shady seller from selling it out from underneath the buyer. Remember, the seller still has the title. So the way how we can protect the vendee, the buyer, is by requiring the seller to record it. Also, Chapter 47H says the buyer has to have 30 days to cure a default. So if they're late, if they miss a payment, the seller has to give them 30 days to make it right. If they don't come up with it in 30 days, then the seller still has the title. So the seller could take the property back, get the buyer back out, and they still have the title that they can sell it or rent it or do another installment land contract if they choose. There are pluses and minuses for both buyer and seller for the installment land contract. But before we do that, we need to take a break. So let's take 10. And when we come back, we're going to keep talking about our installment land contract. We're back. So again, we're talking about our installment land contracts. Seller has to record, and we got attorney involved, so they're gonna know all this too. Seller's got to record within 5 days. If the buyer misses a payment, the seller has to give them 30 days to get caught up. If after 30 days they're not caught up, then the seller can go to the attorney and begin the legal proceedings to get that person out, you know, but they can't do anything for 30 days. So with installment land contracts, there's pluses and minuses, advantages and disadvantages for both parties. So let's talk first about the buyer. The advantages for the buyer. This could be another way for the buyer to finance a property. Maybe for some reason they can't get a loan from the lender, loan approval. So maybe this seller is willing to work with them and allow them to pay directly in installments. This could be a lower down payment for the buyer. They could have lower closing costs. And because they're living there and occupying the property, they may have some tax advantages. So in this scenario, have your buyer contact their accountant to see if they can take advantage of any tax advantages. The biggest disadvantage to the buyer is if they default. So remember, they said you got to give them 30 days to cure. Well, at the end of 30 days, if they haven't cured, then the seller can begin the legal proceedings to get them out. Any monies that have been previously paid, the seller doesn't have to reimburse. It's like lost money for the buyer. So it is kind of harsh if the buyer defaults, but the sellers in some cases is kind of taking a gamble. They're risking with this buyer. Another disadvantage to the buyer is that the title, once they make that last installment payment, the title may not be clear. If the seller put any outstanding liens on it, etc., for example, then when the buyer's ready to take title, it may not be clear, and they may have to work with the attorney to work with the seller to get that taken care of. And because we've said attorney how many times in the last couple slides, there's probably going to be some added legal fees that the buyer needs to pay as well. And then when we talk about the seller, again, advantages and disadvantages. Advantages to the seller, they still own the property. So again, they may have some tax advantages, have them talk to their accountant. I think the biggest advantage to the seller is that they keep the title. They keep the deed in their name. So if the buyer defaults, they still have the property. Again, if the buyer defaults, they just got to give them 30 days. And if they can't cure the default, then the seller can begin the legal proceedings to get that buyer out. And just like an advantage for the buyer, this may be good for a buyer that can't get loan approval. This might be a good option for the seller that has a hard to sell property. Maybe they're looking for that very special buyer that has some handyman, for example, experience. So it might help the seller get rid of a hard to sell property. If the seller needs all the money right now, the biggest disadvantage to the seller is they're not going to get it in one lump sum. They're going to get in payments over across a period of time. So the disadvantages, they're looking at a down payment, they're looking at it in smaller payments. And then if that buyer defaults, those legal proceedings, once again, those attorney fees could get quite costly. Questions on an installment land contract?
I have a couple questions,
Okay.
actually. This is interesting to me. So my first question is, who pays the attorney?
Probably either we have to agree or, you know, one party or the other. I don't know that there's a definite, this is who pays it. So it's got to be agreement of the parties.
Okay. And if there's a broker involved, how do we get compensated if there are payments being made over time?
Because it's not, we don't get paid till it closes, right? So that would be something else that we would have to work into the agreement, because technically it's not closing until that last payment's made.
Okay, so
So
everything is kind of negotiable as far, since we are
pretty
having
much,
it
yeah,
drafted out.
pretty much.
Okay,
Because isn't that what our agency agreements say is we get paid? I mean, we've earned our commission when we've connected the two, but we don't actually get paid until it closes. So that would absolutely be something, if we're involved, Hermanda, we absolutely want to address that.
When I do those, I usually make sure that the down payment includes the amount to compensate both brokers.
There you go.
oh,
There
cool,
you go.
good to know. So since so have you ever, is it like also common to require or ask the seller in the contract rather to not don't do anything to create liens or take out like a mortgage, a second loan against the property or something like that?
I mean, you can't prevent them from doing it, but again, this is why we need to warn the buyer that before they make that last payment, it might be worth them to pay that attorney to do another title search to make sure that that didn't happen. I mean, guys, this could be over a course of 2 years. This could be over a course of 12 years, right? This could be over a long period of time. So if I were the buyer and if I were the buyers that are working with the buyer, I'd absolutely advise them to have their attorney run another title search before they made that last payment and they took title. So they know exactly what they're getting, like if the seller put another lien on the property. I personally haven't done one of these. It sounds like Karen has. I don't know how they're done in Virginia versus here, but I guess what gives me that peace of mind is that now we have to have an attorney involved, like, and not at the very end. I mean, we call an attorney like day one, you know what I'm saying? So they're making sure that, and both parties are welcome to have their own representation always. Another alternative land conveyance is an option to purchase. You guys remember last week we were talking about bilateral contracts and unilateral contracts. And most of what we deal with is a bilateral contract. But in real estate, we do have one unilateral contract, and that is our option to purchase. So in an option to purchase, the optionor is the person, the giver of the option. The optionee is the receivee of the option. And with an option to purchase, the seller has agreed to sell, but the buyer has not agreed to buy. The buyer has simply asked for the option to decide if they want to buy or not. The only agreement made in an option is basically the seller agrees not to sell to anybody else during this period. So the buyer's asking the seller to keep that property open and available while they're exploring their option. How long is the option period? It's all negotiable. It could be 2 days. It could be 2 years. It is all completely negotiable, but the seller is locked. The seller is bound. So in an option, we're going to agree to all the terms up front. The buyer's going to say, if I decide to buy, I'm going to buy it for this purchase price on this date with this money, Here's all the terms up front. At the end of the option period, they either continue on to purchase, thus making it a bilateral contract, or they choose not to purchase. All they're doing is exploring their option. Another thing that makes an option to purchase unique, it's a unilateral contract, but another thing that makes it unique, we actually have 2 forms of consideration with an option to purchase. Of course, we have the purchase price. If the buyer agrees to buy, this is how much they're going to pay for it. But the other form of consideration is the option fee. The option fee is usually pretty hefty. If you're asking me not to sell my home for 2 years, I need some money for that. You guys with me? If you're locking me into something like that, I need some money for that. So the option fee is generally hefty. It's going to be non-refundable. So if the buyer decides not to buy, then the seller's keeping that option fee. If the buyer decides to buy, then that money's credited back to them in settlement. And with an option, we need both forms of consideration. If we don't have the purchase price and the option fee, then we don't have a legally binding option to purchase. I think one of the better examples of these that I've heard, let's say you work for Corporate USA and they want to open a new warehouse down in Wilmington. So they send you, their employee, their broker, to Wilmington to find a couple good warehouses. And let's say you go down there and you find 3 that could work for your employer. You could enter into an option with all 3 warehouses to determine which one would be best. This makes sense? So you enter into 3 options, maybe even have your employer come down and check them out, have the contractor go in and make sure, inspect it and make sure it's good. At the end of the option period, you don't buy 2, but you do move forward with 1. Listing agents, if we get an offer to do an option, do we have to present this to our sellers? Yep, that falls under the category of all offers. So we can't just say, we're not going to do this. That's up to the seller. The optionee, who's the buyer, they have no legal interest in the property. They don't live there. They can't rent it. They can't profit from it. They don't own it. They haven't even decided if they're going to buy it yet or not. So they have 0 title or legal interest in the property. And again, we've agreed to all the terms. So if the auctionee does decide to purchase it, it's on the terms that we stated in the option contract that we first entered into. On day 1, I said, if I buy, this is what I'm going to pay for it. These are the terms, etc. The optionor gives up the right to sell. This is what makes it a unilateral contract. The optionees made no promises. The only promise made is the optionor. I will not sell my home to anybody else for the 2 years of this option period. And the optionor, again, being the only party that has to perform, they can't withdraw their offer to sell. After 1.5 years, they can't say, nope, never mind. Once they're locked into this option, they are in. If the buyer decides to buy, they sell. They're contractually obligated. As you guys can imagine, our standard Form 2T doesn't apply to this situation. So what are we going to do? We call our attorney. I don't have a pre-printed form. And some old familiar friends apply with an option. Statute of frauds requires it to be in writing and signed to be enforceable. The Connor Act says it has to be recorded. Once again, to prevent the shady seller from selling it out from underneath the option buyer, the optionee. So during that time, if they try to sell it, it's going to show up on the title search. So this is definitely a call your attorney, another call your attorney situation. Questions on the option? Another alternative method to convey that we have is something called a preemptive right. We've got a couple different types of preemptive rights, but before we talk about the types, let's make sure we're good with what a preemptive right is. Preemptive right gives the person the first right to purchase. Let me rephrase that. A preemptive right gives a party a contractual right to purchase. We enter into a purchase agreement, a preemptive right, excuse me. Maybe you don't want to sell just yet. So we enter in a preemptive right that says when you do decide to sell, you're contractually obligated to come to me first. Maybe I don't want to buy just yet. But we enter into a preemptive right that says, if I do decide to buy, you're contractually obligated to come to me first. That's what we're doing, is contractually obligating the two to buy first, buy or sell first. So a couple different preemptive rights. The first one is the right of first refusal. The owner gives the buyer the opportunity to match a bona fide offer should the owner decide to sell in the future. So maybe the owner doesn't want to sell just yet, but right of first refusal says, if you ever decide to sell down the road and you get an actual legitimate offer in your hand, you're contractually obligated to come to me first to see if I want to match that. If I don't want to match it, you can sell it. If I do want to match it, I already have that contractual obligation. So right of first refusal. Has anybody ever showed, where are my Winston people at again? Where are you guys at? Have y'all showed property in Old Salem yet? Y'all know people live in Old Salem? Did y'all know that? Okay, that was like brand new information to me. Let's back up, right? So people live in Old Salem, and Old Salem has a right of first refusal. If you ever get an opportunity to show an Old Salem property, when you look in the agent only remarks, it's probably going to talk about the right of first refusal. So it's got to run by Old Salem Inc. first. They have that right of first refusal. They're nice. If you get a buyer with the slightest interest of a home in Old Salem, go show it. Most of them are nice. You know, the outside looks like the days of Old Salem, but it all changes when you walk in the front door. Very modern and up to date in some cases. The other preemptive right we have is the right of first opportunity to purchase. I don't have a bona fide offer to match. I don't have an opportunity to match a bona fide offer. Maybe you don't want to sell just yet, but in the event you do decide to sell, you got to come to me to decide what I'd be willing to pay. I'm not trying to match an offer, and that's the difference between the two. You have that first right of opportunity to purchase. So you don't want to sell just yet, but if you ever do decide to sell, come to me and I'll determine what price I want to pay for it. If you like that price, you can sell it to me. If you don't, you can go sell it to a third party. We're not matching anything. Again, that's the big difference between the two. Yeah.
I was going to ask you a question. I started to type it out and then it was too long. So on the first right of opportunity, like, let's say that someone has the first right of opportunity and then the seller gives them the opportunity to purchase and they don't agree on terms. And then later on, then immediately afterwards, the seller sells a property for something that the first right opportunist would have, like, for example, they didn't agree on the terms, but then like they ended up selling it on those same terms anyway. Is there something that the person who had the first right of opportunity can do to like go?
That's a great question. I mean, you can always get an attorney, right? That's like law 101. You can sue anybody for anything, but I think it would be a hard case here because the person that had the opportunity to purchase declined to purchase it at those terms. You know what I'm saying? So that would be the big thing, is we want something from them saying, no, I'm not going to buy at these terms. So when the seller goes and sells it to somebody else with those exact same terms, it's not like they sold it out from underneath them. They said no. So could they come back? Well, I mean, yeah, you can get an attorney to do anything, you know, but I think it would be a hard case as long as we have that documentation.
Thanks.
Sure. I think a common scenario that we see preemptive rights could be a tenant landlord situation. If you have a tenant in a home for 2, 8, 12 years, maybe the tenant doesn't want to move. Maybe the tenant looks at the landlord and says, look, I've been here for 12 years. I'm very comfortable in this home. All my junk is here. If you ever decide to sell, let's enter into a preemptive right. And then they can choose which one's best for them. Is it the right of first opportunity to purchase? Probably in the lease scenario, this one would be versus the matching a bona fide offer. What if you live next door to a vacant corner lot and you don't necessarily want to buy that lot, but you also don't want Dollar General to buy that lot? You could consider entering into a preemptive right with the owner of that lot. So when Dollar General approaches them and says, hey, can we buy and build yet another Dollar General right here? They are contractually obligated. You would have that opportunity to purchase that land before they sold it to Dollar General. Does that make sense? That's definitely. Who wants to live next door to a Dollar General? Yeah. All three of these preemptive, or I'm sorry, all three of these alternative land conveyance, installment land contract, option to purchase, and preemptive rights. Guys, we do not have pre-printed forms for. So if you're working with a buyer or seller and they ever want to get involved in one of these, we got to get attorneys involved. And yes, attorney fees are going to go up for either party, maybe even both if they decide to split it. But we do not have the skills and the legalese to proceed with these. Just more information that you guys, we're all now just know enough to be dangerous.
Excuse me, Julie, I know you're saying land, but it can apply to any type of real property, right?
Oh, absolutely. Absolutely. Land, house, industry, industrial warehouse, absolutely.
Okay, thank you.
When I do this, do you guys know what I'm saying? I've recently learned that younger generations don't know what this means. So if I go like this, I'm telling you to call your attorney or your accountant. I guess I need to start just actually, we know what this means, right? We know what we're doing. Actually, we do it like this now. Okay. The last little section we have, we're going to go off book. This is pretty much from, it says 2021, 22. I didn't update the power slide, but I promise you the information is up to date. So this is 2022, 2023 CE class. Has anybody taken that has to? Anybody taken CE yet? If you have to, remember you get your first year off of CE. You have? I usually do mine by this time of year. I'm behind and I don't like this. So I need to get in my CE, but I definitely have it done by June 10th. Most class you take with the commission, post licensing, continuing education for the rest of your career, we're going to have something about our license statuses and education issues just to make sure that we're all on the same page. So let's talk first about our license statuses. An active license is the only license in which you can get paid. An active license is the only license in which you can promote or advertise your services in any way. Unless your license is active, you can't even hand out a business card. We're going to talk about something in just a second. We're going to talk about a current license. And when you guys see current, I actually want you to see the word currency. A current license is current. They can be one of two things. And a current license is current because the licensee has paid the fee. How do you keep your license current year after year after year after year? You pay the fee. Now, there's a couple different statuses of current, one of those being active. The last, I don't know how many years, the renewal fee has been like $45. So it's not like we're looking for too much. I think it's important that we understand that the Real Estate Commission operates on a physical year. They do not operate on a calendar year. So the Real Estate Commission's year is July 1st to June 30th. Our renewal period every year is May 15th to June 30th. This is the time that we have to pay the fee every single year. If you want your license to be current, you've got to submit that $45 every year. You guys all know now that you have your license, you have a log on the commission's website. If you like licensee login and you can actually log in and view your account, that's exactly where you go to pay that renewal fee. They'll take a credit card. I'm very proud of the commission. This is very new within the last couple of years. They've stopped taking checks. Look at them go, you know? So you put in your credit card, $45. You've renewed your license. Your license is current. Take that current license a step further and do your CE each year, which I will talk about. And that's what gives you an active license. All you have to do for an active license is pay the $45 fee and do 8 hours of CE each year. Again, I will talk more about CE in just a second. Now, you guys as provisional brokers have an extra step to take to have an active license. What's the extra step that you guys have to take to have an active license?
Affiliation with a BIC.
As a provisional broker, you pay the renewal fee, you do CE when that time comes up for you. Remember, you could take your first year off. But as a provisional broker, take this a step further. And now to be active, you have to be affiliated with a broker in charge. So a current license, again, the word current means everything. And we're going to talk about what happens if you do not pay the fee. We're getting there. The other status of a current license, if you're not active, you are inactive. So a current license can be active or inactive. Why is it current? It's all about the fee. It's current. That's right, Katie. It's current because you showed them the money. You got to show them that money every single year. If a current license is inactive, it's because you're a provisional broker without a BIC, you failed to take CE or post licensing on time, or by choice. Some brokers come to a fork in the road and decide that we need to put real estate off to the side for a second. And they may choose to ride for a couple years, a long period of time, maybe just a couple months on an inactive license. So you can choose to be inactive. All you have to do is pay that fee. You could ride for the rest of your life on an inactive license as long as you pay that fee between May 15th and June 30th. Everybody good so far? Questions so far? Can I erase all this? Okay. If you are inactive and you want to reactivate, and y'all don't get so bogged down on writing this down, let's just kind of get an idea here. If you're inactive and you want to reactivate, what you have to do to reactivate depends on your CE, on your education deficiency. You can take CE on an inactive license. So if you pay that fee every year, you could still keep doing CE. And if you don't have a CE deficiency, all you got to do is submit the form to the commission. When I first got my license, I rode on an inactive license for about 4 or 5 years. I paid the fee and I did CE because I'm kind of a nerd that way. So I still did both. And I'm telling you, when I wanted to activate, I sent them an email and I said, what do I need to do? And the response I got back from them was, you're active, have a nice day. That was it. That's all I had to do because I was current and I did not have a CE deficiency. If you're inactive for less than 2 years and you have a CE deficiency, they're going to make you get caught up on CE. They're going to make you do this year's update course, and they're going to make you do some electives. You just need to contact them to find out how many electives. If you're inactive and you've been more than 2 years without CE, again, you got to do this year's CE. And you're going to come back and do 2 post-licensing classes within 6 months. So again, you are inactive because you've always been paying the fee. You keep sending that money in. But now the commission needs to determine, when was the last time you did CE? What is your CE deficiency? And if you do have a deficiency, the takeaway I want you to get from this slide is that they're going to make you get caught up on some of your education.
So the two, sorry, Julie, it's Clara.
Please.
For the inactive 2+ years with CE deficiency, you
Mhm.
have to take 2 post-licensing courses within 6 months. So it's either 301, 302, and 303.
You can pick.
Again?
Yep, you can pick. You said again, but that's assuming you took it to begin with. You see, some people get their license and stay inactive and don't go to post-licensing. So if you never activate your license, right, everybody's a little bit different, which is why if you find yourself in a situation, the best bet, just ignore everything you're looking at right now. The best bet I had to tell you is call the commission and say, what applies to me? What do you need me to do? Because they got a record of you and they'll be able to tell you what you need to do to get caught up there. So what if you don't pay the fee? If you don't pay the fee, I don't care if you've done CE and post licensing or not. Remember, a current license has everything to do with the money. A current license has everything to do with money. It has nothing to do with education. So let's say you've done your post licensing and you've done your CE, but holy crow, I forgot to pay the fee. Failure to pay the fee means that on July 1st, your license is expired. So the 2 main statuses, you can be current by paying the fee. You can be expired by forgetting to pay the fee. We have, because we're all online now on the website, we have until 11:59 p.m. on 6/30 to pay that $45. They've got to have that fee in by 11:59 p.m. If they don't have that fee by the stroke of midnight on July 1st, your license is expired. Can you practice on an expired license? Can you hand out a business card on an expired license? Can you get paid on an expired license? Guys, don't worry. As long as you're paying attention to what's going on around you, you will know that it's the renewal period. They send you emails. They got a countdown clock on their website. Your BIC will probably ask you about 6 times if you paid the fee. So unless you're just ignoring your phone calls and emails and you have your head in the sand, you're going to know that it's the renewal period. Just pay attention to what's going on around you. So what if you let your license expire? Again, maybe you've come to a fork in the road and you think you're done with real estate for a while and you're going to save yourself $45 a year. And you let yourself go expired. And then you wake up one day and you say, well, gee, I want to do real estate. If your license is expired, what you need to do to reactivate, once again, depends on how long it's been expired. If it's expired for less than 6 months, you're going to pay the renewal fee and a reimbursement fee or restatement fee. I'm sorry, reinstatement fee. 45 plus 45. Less than 6 months, you're looking at $90 until those amounts change. If your license is expired 6 months to 2 years, you got some choices. You got to pay that $90, those fees again. You can either pass a post licensing within 6 months or go back to PSI Testing Center and pass the national and state section of the exams again. Does that sound like fun? If your license is expired for more than 2 years, you have to start all over. Does that last one hurt? Goodness, that hurts me. Is it worth sending the $45 in every year to keep an inactive license? I can't answer that for you. I can't answer that for you. You know where you are in your life when you get to that fork of the road, etc. But before you stop sending that payment in, remember me telling you this. If you're expired for more than 2 years and you wake up one day and you decide you want to get back into real estate, you have to start all over. Looks like Aaron's going to send in the $45.
Look, Julie, I enjoyed you in pre-licensing. That was the worst thing I've ever done.
But not that good.
Not
Not
much.
right? Y'all know before COVID hit, the last in-person class I got to teach, I had two that were there because they were there on an expired license. And they both they didn't know each other. They're no relation whatsoever. Just 2 random people showed up in pre-licensing class. They had to start all over. And they both told me, I thought I was done with real estate. And then, so I was going to save some money. You know, I'm going to save $45 a year. Come on, we go out to dinner sometimes and spend a fancy meal out, spend that, right? Then they wake up, and I don't remember how long they were expired, but both of them were over 2 years. Their road in life came back to real estate, and they had to sit in my class and go through it all over again. Things happen, maybe we take a break to start a family. Maybe we take a break to care for elderly parents, or, anything's possible here. But if something comes up and real estate's taking a back seat, you just really need to ask yourself, is it worth sending in that $45 every month? Questions on that? Comments? Are we scared?
Can you talk about how the timing works? Let's say, like in my case, I got my license in June. So my post, from what I understood, my post licensing courses, my first year was counted from June to July, or June 30th, right?
So in June, and then you got, July, August, September, October, November. As a matter of fact, Amanda, what I'm going to do, I think I have it somewhere. I need to get it, but I actually just learned about a website, and I'll get it on break. It's like a calculator where you put a date in and it'll tell you what 18 months from that date is. So let me see if I can't, when we go on break, let me see if I can't find that calculator. But basically you're looking at 1.5 years. So when you guys got your license, there's a date on your license, looks like right about here. 18 months, and that actually takes me to my next slide. 18 months from this date is when you have to complete post licensing. And I'll see if I can't find that calculator. I just learned about it. Don't let this time get away from you. Again, if you're not sure, if you don't remember, it's right there. So you guys, yeah.
Sorry, no, I was gonna ask about the CEs though, but doesn't that start?
Give me 1 minute. I'm getting to CE. Yep.
Okay.
Give me just 1 minute. So provisional brokers, I call you guys my brokers with training wheels. In other words, you can't ride your bike alone just yet. In order to ride your bike, you have to have a BIC. So you guys are out riding your bike with training wheels. You have 18 months to complete post licensing from the date. If you want to be active, you have to be supervised by a broker in charge. And unfortunately, post licensing does not count as CE. Guys, they're 2 different things. I know you haven't taken CE yet, but we're going to talk. Our CE classes are only 4 hours. Post licensing is 30. They're two different things. They're two different departments down at the Real Estate Commission. So your post licensing does not give you CE credit. When it comes to CE, we do 8 hours a year. Remember, it's a physical year, July 1st to June 30th. We don't go on a calendar year with the commission. There's a 4-hour update course. If you are a provisional broker or a full broker, you do the general update, also known as the Gen Up. If you are BIC eligible or the designated broker in charge, you do the broker in charge update, also known as the BIC Up. Make sure you take the right update for your status. If you're a provisional broker, you can show up to the BIC Up, but you're not going to get credit for it. You're only going to get credit for the one that you're supposed to be in. In addition to the 4-hour update, we also have a 4-hour elective course. And this is more a topic of your choosing. There are a cajillion elective topics out there. I encourage you guys to find an elective that runs in line with your business. Do you have a niche? Is there something you want to learn more about? Is there something you're interested in? Why not kill 2 birds with 1 stone? You got to take the elective anyway, but why not find an elective that can help, you know, strengthen and build your business? You can always go to the commission's website, especially now that we're on Zoom. A lot of schools, some are back in person, but a lot are still on Zoom. So this kind of broadens our horizon a little bit on the electives that we want to take. Hermanda, to your question, as a provisional broker, remember our physical year is July 1st to June 30th. You guys don't have to take CE your first renewal period. So whenever you got your license, Hermanda, you said you got your license in June something. So your first renewal period was May 15th of the following year. So you don't have to do CE until your second renewal period. Does that make sense? You get to take your first renewal period off. Y'all listen to me. Always pay the fee. This is not the same thing, but you get to take. So whenever you got your license, the first time you hit May 15th, you don't have to do CE. You get your first renewal period off.
Hey, Julie, what's that fee I just got in my email? $500. Does that?
Winston-Salem Board of Realtors.
Oh, right. Okay.
Merry Christmas.
Thank
Why does
you.
that bill come out on December 1st?
Love it.
Yeah, that's not nice.
I was sitting with a coworker at lunch when we both got that email and we uttered some 4-letter words because, oh yeah, it's that time of year. You know. So yeah, all Board of Realtors has different dues, different deadlines. That's just Winston-Salem. Why don't all you guys unmute? Let's everybody unmute. Let's try and do something fun. Wake us up a little bit. Everybody's unmuted. Everybody tell me when the CE to do deadline. When's the deadline to do CE?
June 10th.
Well, that wasn't everybody. Everybody tell me. When is the deadline to do CE?
June 10th.
That's a little bit better. June 10th. June 10th, June 10th, June 10th. Thank you, guys can mute again. June 10th, June 10th, June 10th. Guys, this is the deadline to do CE every single year. Once you get past your first renewal period, there is a blackout period between June 11th and June 30th. No school in the state of North Carolina, no education provider in the state of North Carolina is allowed to offer CE for credit. June 10th is the deadline. I need you guys to promise me that we are not going to wait until June 9th or June 10th to take CE. Because failure to take CE for any reason, unless you can prove a hardship, means that when you wake up on July 1st, assuming you've paid the fee, when you wake up on July 1st, your license is inactive and will remain inactive until you can get caught up on CE. Some schools may offer CE in July. The majority of schools don't start ramping up CE again until like August or September. Again, Zoom has helped because now you can take a class in Wilmington without having to drive there, for example. But understand, you wake up on July 1st, assuming you've paid the fee, your license is inactive until you can get CE. Things sometimes happen. Back in my admin days, I used to kind of be the lane of a school. And I'm telling y'all something, on June 11th, my phone was blowing up. I forgot to do CE. What do I do? Well, get it closed because on July 1st, your license is going to be inactive. Guys, this is out of our control. I used to have an instructor that liked teaching CE on June 10th. She said she used to like to meet the daredevils because those are the ones that were knowing they were going to wake up and not have a flat tire. Or in today's age, waking up and knowing that they were going to have internet. Again, you're going to have to prove a hardship to get an extension. And I'm telling you, a hardship is not, I got busy and I forgot. A hardship is something like active military deployment, for example. A lot of agents will tell you we tend to slow down about this time of year anyway. Isn't this a great opportunity to do CE? So you're ready for the spring market and you don't have to worry about finding the time. June 10th, June 10th, June 10th. This date should be up there with like your birthday. Very important date. Questions? CE. Questions on anything? Provisional broker, active, inactive, expired? Okay. Let's take a break. All right. So. Let's see. Amanda, the website I was talking about earlier is calculator.net. And when you go to calculator.net, one of your options is a date calculator. So then you can come in here. Let's say you got your license. I'm just going to make something up on June, I don't know, 25th of 2021. And you tell it 18 months and it calculates beep, boop, boop. You have until December 25th of 2022. Isn't that kind of cool? So calculator.net. And then you do the date calculator. You can put in the actual date that's on your license and then put in 18 months. And then it'll tell you. And obviously you're not going to be able to take post licensing on Christmas Day. I'm not teaching on Christmas Day. You know? So, you know, if it's falling right there around Christmas, I mean, I would imagine most schools are about close to wrapping up for the year within the next week or so. Sweet. So you're good there. Shoo. Are you signed up? You said you had a third one. Are you already signed up for it?
Yeah, I start on Saturday and Sunday. It's 8:30 a.m. to 4:30 p.m.
Okay. And which one do you have left to do?
Relationship.
301.
Yeah.
It's a long word. Brokers, relationships, and responsibilities. That's just a fancy way of saying agency.
Yeah. That should be good.
Good. So yeah, if you're just joining us, we're looking at that calculator. Did I close it out? No. Calculator.net. And specifically, you want the date calculator. So if you come down, I mean, the math nerd in me is like, oh, look at all these calculators. So I may have to play around with this and see what all fun things I can do. But particularly your date calculator and then your 18 months. Questions or comments? Good. I'm glad you're not going to lose it. We have some more forms to look at. So that's what we're going to do the rest of this evening is talk about some more forms. If when you get a test question on forms, you know, they're not going to ask you, you know, what's the second sentence in the third paragraph on this form say? I mean, they're not looking for all that. But typically what you're going to see on your exam tomorrow is they're going to give you a scenario and then they're going to say which form applies. So this is what we're doing is going through these forms and getting a general understanding, getting a basic understanding of what these forms do. Do I have anybody that currently lives in the mountains or down at the beach? Karen's, you're down east, right? Up in Virginia?
I'm in Virginia, but my North Carolina is the Outer Banks.
Nice.
It's a lot of vacation rental.
So Karen may get to deal with vacation rentals. For those of us up here in Winston-Salem, I mean, Winston-Salem's lovely, but let's face it, people are not vacationing here. They might be coming here for business, and you might have, but I just don't think we're dealing much with this here in our neck of the woods. If you are in a vacation prone property, if you work for a firm that does vacation rentals, we have a form for that. There's the vacation rental addendum. The big thing that we need to understand, and this is one that I'll let you guys go through, but the big thing that we need to know, if a buyer buys a property that's a vacation property, when they buy, they're going to honor from the closing date any vacation property, any rentals that are already booked for the next 180 days. So anything that's on the book, basically, what are we saying, a year and a half here? I'm sorry, yeah, 6 months. It's just 6 months, not a year and a half. So anything that's already scheduled for the next 6 months after closing, that needs to be honored. Now, if you're buying this property as a vacation property, you want to continue all vacation, right, rentals. If you're buying it for yourself, for your personal reasons, just know you got to honor those next 6 months. So that's our vacation rental agreement. Another addenda that we have is the short sale addendum. We're going to spend just a few minutes talking about this one. I like this form for several reasons. The first thing I like about it is that it actually defines what a short sale is. And a short sale is comprised of 3 pieces. First off, the seller is underwater. And what I mean by that is the purchase price is less than what they owe. So they owe more than what they could sell it for today. In addition to the seller being underwater, they don't have sufficient liquid assets to cover the difference. So they can't sell the house for what they owe, and they can't drain their bank account or cash out their stocks. They don't have those sufficient liquid assets. And then the third piece of it is we have to get all of the lien holders, anybody that's owed money, has to agree to allow the seller to convey with them making less than what they're owed. So the lien holders have to agree. And if you ever get an opportunity to do a short sale, and my crystal ball tells me short sales and foreclosures are coming back, there's got to be a result of these markets of buyers paying $50,000 more than asking price and more. And I think we're going to see for foreclosures and short sales. What makes a short sale has nothing to do with time. What makes these things a short sale is because the seller's short on funds. If you ever get to do a short sale, the name of the game is patience, because it takes the lien holders a while to approve the short sale. So generally speaking, this is how these things work. The seller calls the listing agent to list their property. The listing agent puts the property on the market. It is a material fact to disclose that this is a short sale potential. I'm not in a short sale just yet, but we do have to disclose that this is a short sale potential. So we list the property. The buyer comes in and makes an offer. The buyer and the seller negotiate the terms of the offer. And upon acceptance, everybody signs, and then communication of acceptance crosses the line. Everything sounds pretty familiar so far, right? The only hitch we threw in there is we have to say short sale potential. And in the Triad MLS, that's a status you can choose. So you don't even have to worry about remembering to put it in the remarks. You can choose that status of short sale potential. Once we have a signed contract in our hands, once buyer and seller have agreed on terms and we're under contract, that's when the lien holders start their process to see if they're going to approve the short sale. Lien holders aren't going to touch it until they know they have a legitimate, serious buyer willing to pay X amount for the property. These things are known for taking a while. They say on average, we can expect about 6 months for a short sale from contract to approval from the lien holders. I don't know why they sit on them for months. I don't know what takes so long. I don't have all those answers. What I do know is they're known for taking a while. I've done 2 as a buyer's agent. I've done 2. One took me about 4 months. The other one took 11 and a half months. So when we say on average 6 months, some are less, some are more. Questions so far about what a short sale is?
I remember the days I was doing 14 or 15 a month.
Yeah.
Crazy.
around the housing market crash or shortly after the housing market crash. Karen, what do you think? Are we heading back to this? Is this
I
where
believe
we're?
so. I would say yes.
I think so. Like, there's got to be some kind of repercussion for buyers over, I hate to say overpaying, but paying more than especially the amounts. And I think we're going to see short. So you guys very well, especially plan on listing. There's, education out there. And I'm sure your BIC will have a sales meeting on them to help prepare us when we do start seeing them come back. As with buying any property, there are always risks. The short sale addendum actually spells out the risks. Buyer and seller understand and agree that no lien holder is required or obligated to approve the short sale. So just because you go under contract as a buyer doesn't mean you're going to get to buy this property. Remember, the lien holder is not touching this until you go under contract. And there's no obligation on their end whatsoever to even approve this. In order for this to happen, we got to get all of the lien holders to sign off on it. Lien holders may require some terms of the contract to be amended. We know that needs to be changed in exchange for approval. But buyer and seller are not obligated to agree to any of the lien holders' proposed terms. So the lien holder or lien holders may get their hands on the contract and say, no, 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 this is what we're going to do. This is the dates, the monies, the amounts. This is what we're going to change. Buyer and seller still have to agree to those terms. The lien holders can't hold them to the term. So they're not obligated to agree to the lien holder's proposed terms. Seller may not financially be able to make repairs. We all know sellers don't have to do repairs anyway, but the lien holder or lien holders may not allow the seller to do approvals. Let's think that, or to do repairs. Let's think this through. If the seller agrees to, I don't know, repair the roof for $5,000, isn't one of those lien holders going, whoa, 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 whoa. If you got $5,000 laying around to repair the roof, then why am I asking to give up my money, right? Why are you asking me to do this? So the lien holders may put a stop to that out of the seller's control. The costs of due diligence and due diligence fee are usually not refundable to the buyer in the event that the short sale is not approved. As a buyer's agent, that hurts a little bit, doesn't it? I'll tell you, both of my short sales, I went in with zero due diligence and we went in heavy on earnest money. As it gets competitive, I mean, I wasn't in multiple offers in either one of my short sales. So I think that's how we were able to get away with that. But just keep in mind that there are other terms that we can negotiate. So depending on the market, depending on what's going on, buyer's agents, in this case, you just got to try to protect your buyer as best as you can. Lien holders approval may take several weeks or months to obtain, and neither the seller nor the agent can guarantee the timeliness of the lien holder's review, approval, or rejection. Again, you guys, the name of the game is patience. I don't know another way to tell you that. You just got to be patient. You're not going to be able to call the lien holder every other day and say, you got approval, you got approval, you got approval. It just doesn't work that way. We got to get all of the lien holders. And then neither the buyer, the seller, the attorney, nor the brokers have any control over lien holders' approval or any act, omission, or decision by any of the lien holders in the short sale process. The short sale addendum creates a contingency. I have no contingencies in standard form 2T, but if you use the short sale addendum, you've created contingency. And in this case, the contingency is on the seller. The seller can't sell if they don't get lien holder approvals. So in order for the seller to sell, they got to get all the lien holders to sign off on this. Parties' right to terminate. Anybody can terminate at any time until we receive notice of approval of the short sale. We'll look at that in a second. Either party may terminate by written notice. And here's the good news. The earnest money deposit shall be refunded to the buyer. So we're still obviously going to have earnest money, but if we never get short sale approval or if either party terminates, I'll tell you guys, my 11 and a half month, every property that hit the market, I was calling my buyers and I was like, hey, y'all want to go out and see this one this afternoon? They really wanted this house and they waited patiently 11 and a half months to get it. But I was trying it. If I found something else for them, then we could terminate this one and I knew I could get their earnest money back. When it comes to dates, I can't put an actual date in for due diligence and settlement because I don't know when we're going to get approval. So I can't put, we're going to do due diligence until January 15th and then close on February, because I don't know. The addenda tells us due diligence is going to extend through 5 p.m. on the 15th day. And remember, our contract says when we're counting days, a day is a day is a day. So if we do 15 days, or we can put in another number of day here. And then we do the same thing for the settlement, take place on the 30th day following notice of approval. So all things happen once we get notice of approval from the lien holders. Our blue note says instead of putting dates in the contract, refer the contract to this form. Put in there, see attached short sale addenda, because that tells us how many days we have for due diligence and how many days we have for settlement once we get that notice of approval. And then there's this. This is where things get interesting. Other offers and additional contracts. Rules of the Real Estate Commission require offers from other buyers received by the seller's agent to be presented to the seller. We're all good with that. We present all offers, even if we're already under contract or if we're waiting short sale approval, still present the offer. The commission also requires the seller's agent to inform lien holders of all offers and contracts of the sale of the property received after a short sale has been submitted to the lien holder. Seller hereby represents to buyer that there is or is not an existing contract of the sale of the property. In other words, we can have multiple contracts on a short sale. Lien holders, for the lien holder, it comes down to what's going to cost me the lease and what's going to be the least amount of time. So they're going to choose the contract that is the best for them. And that's the one that's going to get notice of approval, and the others will not, may have multiple contracts. Offers from other buyers may be accepted and become contracts known as additional sales contract. Seller or lien holder may, prior to notice of approval, elect to substitute any existing or additional sales contract or withdraw this contract from consideration. Unless the contract has been terminated, seller shall promptly notify buyer in writing of the occurrence of any of the following events. So the seller needs to notify the buyer of an acceptance of an additional sales contract, lien holder substitution of an existing or additional sales contract, short sale approval, or seller's closing on an existing or additional sales contract. Thoughts on that? Multiple contracts. Now this is getting interesting, isn't it? Only one's going to get approval, notice of approval. Seller's got to represent they have or have not filed foreclosure. Seller represents they are or are not under bankruptcy. Sellers advise, guys, if you're the listing agent getting ready to list a potential short sale, we got to talk to everybody. We got to talk to our attorney. We got to talk to our CPA. The seller needs to talk to everybody. Buyer signs on the left, seller signs on the right. And then the fourth page of this is notice of approval. So once the seller gets approval from the lien holders, they have to provide written notice to the buyers to let them know that we have that notice of approval. And they have that form here for them, so they can just go ahead and do that. Questions on short sales? I'll tell you the 11.5 month one I did, you know, even though it was 11.5 months, the listing agent, her email, and Karen, this might be you, I don't know. Her email signature boasted her as a foreclosure and short sale specialist. Like that was her niche. Yeah, my eye twitched a little bit too. That's a heck of a way to make a living, y'all. But that was her niche. And you know what? It was an absolute joy to work with her because she knew what she was doing, because she was proficient at it. The first short sale I did, I think it was the agent's first short sale as well. And she had no clue what was going on. And it made a huge difference. 4 months versus 11.5 months. The 11.5 month one was much smoother. So again, if this is an area you're going to head at, you know, sellers you want to go after, foreclosure and short sale, get you some more training. See if you can't take a CE class on short sales and foreclosures. Get yourself some training through your local board so you can best represent your seller. I remember after the housing market crash, my real estate firm had an attorney come into our sales meeting and talk to us about these things. So I imagine as we start seeing these, your firms will hopefully get you somebody in that can help educate us. Questions or comments on a short sale? I would say too, my 11.5 one, they had like 2 outstanding mortgages. They had a failed startup business attached to the property. They had a dang lien with the IRS. I'm pretty sure that's what took us so long because, you know, the IRS isn't going to get back to you real quick, you know, so I'm pretty sure that was part of the holdup, was getting them to cooperate. We got through it. Yeah. Is it easier to, are you typing me a question? Is that what we're waiting on? No. Oh, I thought you waved at me like you had a question. I just want to make sure I was skipping anybody. Okay. Another form we have is the Owners Association Disclosure Addendum. Owners Association, in this case, referring to HOAs, specifically says, note, we're going to use this when the RPODs is not required. So for example, when it's new construction or by agreement of the parties. So you guys will remember with the RPODs, it like the first 2.5 pages is information about the condition of the property. And then the last 1.5 pages is information about the Owners Association. So when the RPODs isn't required in new construction, but it's in an HOA, we still need to get the Owners Association information out. And that's where we can use this form. So you can see we're going to disclose the information about the Owners Association, who the association is, what the dues are per. We got the list of things that the dues cover. I like this, like a little checklist. You can just go through and check. And this is pretty much the last 1.5 pages of the RPODs. Of this date, there are no other dues, fees, or special assessments, except anything we'll list here. There are no unsatisfied judgments or pending lawsuits, except anything we're going to list here. The Owners Association in connection with transfer of the property are as follows. So the transfer fees, move in and move out fees, etc. Seller authorizes and direct the owners association to provide these documents. We saw these in the listing agreement. We saw these in the contract. Now we're seeing these in the owners association disclosure. Anything that the seller, which in this case is probably the builder or the developer selling, providing the applicable documents. Buyer signs on the left, seller signs on the right. Owners association disclosure addendum. Questions on that one? Then we have FHA VA financing. We're going to add this form to the offer to purchasing contract when your buyer's getting an FHA or a VA loan. Breaks it up into two pieces for us. Let's talk about FHA first. Expressly agreed, notwithstanding any other provision of this contract, the purchaser shall not be obligated to complete the purchase of the property or to incur any penalty for forfeiture of earnest money deposits unless the purchaser has been given in accordance with HUD FHA requirements, a written statement issued by the Department of Veteran Affairs, setting forth the appraised value of the property, not less than, and then we're going to put an amount in. In other words, what we're saying is if the property doesn't appraise for this, the buyer may choose to terminate. And if they do, they are not going to incur any penalty, which means they can get their earnest money back. This form is protecting the buyer's earnest money. Even if we find out it appraises, it's not going to appraise after due diligence. The purchaser shall, however, have the privilege and option of proceeding with the consummation of the contract without regard to the appraised value. So again, if it appraises, the buyer has a choice. If they can come up with a difference, if it doesn't appraise, they can come up with the difference, or they also have the right to terminate. And if they do terminate, again, they'll get their earnest money back. Listing agents, obviously buyer's agents, but listing agents, make sure you have this conversation with the sellers. What do you guys think? We haven't been doing many FHA loans in this crazy housing ride we've been on. I think a lot of it is sellers feel, this is a little risky, especially when they're accepting, $50,000 over asking price. Is it going to appraise for that? Probably not. So
I don't know.
FHA, yeah.
I don't know that sellers agents are doing their jobs in explaining this form, because I would say 90% of my transactions have been FHA when I represent buyers.
Nice. So you've
So,
gotten them in.
it might be luck, but I don't know.
I think part of what I've been hearing, with the conventional loan, you terminate, you lose, the seller gets the earnest money. And this is protecting the buyer, assuming that it doesn't appraise. Now, that's the only thing that's going to protect their earnest money is the appraisal. This isn't protecting for anything else. The second half of this is VA. If it's a VA loan, again, very similar. Buyers shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase of the property if the contract price or cost exceeds the reasonable value of the property established by the Department of Veteran Affairs. So again, if it doesn't appraise for the purchase price, the buyer can choose to terminate. Again, they'll have the privilege an option of proceeding with the consummation of this contract without regard to the amount of that value. If they do elect to complete the purchase, buyer shall pay such excess amount in cash from a source which the buyer agrees to disclose to the Department of Veteran Affairs. So the buyer has to, if it doesn't appraise, the buyer's got to come up with a difference, and they have to tell the lender, the VA, where this money's coming from. They probably won't be able to get a loan because they're trying to get a loan to purchase the home. So this lender is probably not going to allow them to get a loan for the difference. And that does include a loan from a private source. So an example of a loan from a private source is, like the bank of mom and dad. Mom and dad wouldn't be able to lend the money. Can mom and dad gift the money? What's the difference in borrow and gift? If I'm borrowing your money, you pay me back, right? So mom and dad could gift it, but guys, the VA is going to make mom and dad sign something that says this is a gift and they don't expect it to be paid back. And if mom and dad lie, that's called loan fraud. And, that's frowned upon. So if it's a true gift, the VA may approve that. But the point is they have to disclose to the VA where they're coming up with that difference if it doesn't appraise. The second piece of this then says, if the buyer does get a VA loan, they may require well or water, septic or sewer, or wood destroying insect inspections to be performed. If they do require them to be performed, they may or may not be required to be at whose expense? The seller's expense. The VA can require these inspections, but not allow the borrower to pay for it. So again, listing agents, when you get an offer in for a VA, isn't this an important conversation to have with the sellers? And let them know if they accept this offer, they may be on the hook for the pest inspection, well water, septic sewer, etc. If they are required to be at the seller's expense, seller agrees to pay the cost of the expenses. Unfortunately, I think VA loans are something that we've not done as much with in the last couple of years for this similar reason. The buyer's protected if it doesn't appraise, and now take this one a step further, and the seller's on the hook for some of these costs. I mean, put yourself in the seller's shoes. You got 30 buyers with offers in their hands, and one of them requires you to pay the pest inspection. That doesn't look real good, does it? One of them protects the earnest money. It's tough. It's been tough to be a buyer lately, Buyer signs on the left, seller signs on the right. And this is one of the very rare forms that you and I get to sign as well. You and I get to sign the FHA VA addendum. Isn't that exciting? The other one we get to sign is the, I think it's the lead-based paint. What we're signing, by the way, seller, purchaser, and the broker hereby certify that the terms of the sales contract are true to the best of their knowledge and believe it is agreed that any agreement entered into by any of the parties is fully disclosed and attached to the sales contract. Seller, purchaser, and broker fully understand it's a federal crime punishable by fine or imprisonment or both to knowingly make any false statement concerning any of the above facts is applicable under this title. I think what they're trying to do is prevent seller and buyer maybe from being in cahoots together, working together to try to get a better deal, a better loan, a rate or something. So we're just certifying that everybody is true, to the best of their knowledge. Let's see, I would have been the listing agent and our buyer was getting an FHA loan and the lender had me sign a separate form that said I acknowledge that. I mean, basically buyer and seller didn't know each other. I don't know if they know each other or not. I didn't think they did. Questions on this one? We'll come back to that one. Let's go down here for a second. Additional signatures addendum. Our offer to purchase and contract has a place for 2 sellers and 2 buyers to sign. What if you have more than 2 sellers? What if you have more than 2 buyers? Well, we still need everybody to sign it. And now we can use our additional signatures addendum. And we have 1, 2, 3, 4, 5, 6, 7, a place for 7 more buyers or sellers to sign. So there's 2 on the contract, 7 here. So now you're up to 9. If you have more than 9, do another additional signatures addendum. You need to do as ever many of these as you need. All sellers on the deed and their spouses, whether or not they're on the deed or not, all sellers and their spouses need to sign. All buyers that plan to purchase need to sign. So we can use this form for that. And it says the additional signatures addendum is attached to and made part of the following named documents. So this isn't just necessarily for 2T, and you see here you have a guidelines as well. If your listing agreement, if your buyer's agency agreement, we want everybody to sign, make sure everybody's on board and get them to sign. Questions on that? Lead-based paint, lead-based paint hazard addendum. During due diligence, buyers shall have the right to obtain a risk assessment or inspection of the property for the presence of lead at the buyer's expense. A buyer may waive the right to obtain a risk assessment or inspection of the property for the presence of lead at any time without cause. Intact lead is not, that is in good condition, is not necessarily a hazard. I think one of the most important things we can do with our clients anytime we're dealing with a home that was built prior to 1978 is provide them with that EPA pamphlet. You can purchase the pamphlet. If you're frugal like me, you can go to the EPA's website and download the free PDF. So you can include it in your packets that way. But it's just protecting your family from lead in your home, helping to educate the buyer about the dangers and the things that they need to be aware of. By the way, there's a for rent version of this form as well. So if you have a tenant moving in with young children, we may want to also help educate them by providing them with this pamphlet. The warning, every buyer of an interest in property of the residential built prior to 1978 is notified that such property may present exposure to lead from lead-based paint that may place young children at risk for developing lead poisoning. It goes on to talk about the damage that it could do to those developing bodies. I think we know that lead is particularly harmful for children and women with pregnant women. So again, just educating the buyer. This is kind of a dual form. The seller has to disclose and the buyer has to acknowledge. So first off, and guys, when it comes to this form, this is like the one place that the seller can't hide behind caveat emptor. If they know of lead in the home, they have to disclose it. So the presence of lead, seller has to initial the presence of lead. Either they know about it or they have no knowledge. And then if they have any records or reports, they either provide them to the buyer or they have no reports. So if they've ever had it tested, probably if they ever had contracted work done, then they've had it tested. They chip some off the windowsill and send it in and have it tested for lead. If they're do-it-yourselfers, I mean, they're absolutely welcome to have it tested, but if they're do-it-yourselfers, they may not know that they can. But again, if they've had contracted work, then they should have had it tested. And if they have reports or records, and they have to provide that to the buyer. So seller disclosure, again, I can only speak for the Triad MLS, but generally speaking, when you go to your MLS attachments and you pull the RPODs and the MOG, if the home was built prior to 1978, you're going to have this as well. And then when the buyer presents the offer, they do their acknowledgement. So the buyer has to acknowledge receipt of the seller statement said above and copies and reports, if any. The buyer's going to acknowledge that they've received that pamphlet. Don't ask your buyer to sign this if you don't give them the pamphlet. If you don't give them the pamphlet, then they're not going to sign it. So make sure you provide them that pamphlet. And then the buyer can either accept the opportunity during due diligence to conduct a risk assessment, or they can waive the opportunity to conduct a risk assessment. Agent has informed the seller of their obligations, the fact that they have to disclose, for example, the fact that they have to provide reports, for example, and is aware of their responsibility. Buyer signs on the left, seller signs on the right. And this is the other form you and I get to sign. So we get to sign the lead-based paint and the FHA VA addendum. Questions on this one? Y'all know one of the commission's more popular jokes. They got two popular jokes. The commission has a sense of humor, and they got two jokes. And one of them is, there's a form for that. So if you ever call and say, oh, I don't know what there's a form for that. Not in all circumstances, but in a lot of them, there's a form for that. Their other little joke, by the way, the answer to many of their questions, it depends. Because a lot of times they need more information before they can answer that question. So much is dependent on so much. E-backup contract addendum. Buyer and seller acknowledge that seller has previously entered into an offer to purchase and contract with, then we're going to put the name of the buyer. By the way, listing agents, you are under contract and another offer comes in. Do you have to present it to your sellers? Yep, because we present them all. What if that other offer comes in and it's great? It's a lot more. It's more expensive. They can get more money. They get more due diligence. Da 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 da. Your seller looks at you and says, "I'm going to terminate with buyer number one so I can accept buyer number two." What do we need to advise that seller to do? We're going to tell them to terminate? I'm not. What are we going to tell them to do?
Counter?
No.
No.
I mean, they can counter, but I'm not going to have them accept anything while they're already contractually obligated,
Oh, right.
especially if they're thinking about terminating. I need them to call their attorney because the attorney needs to explain to them, just because offer number two is a higher purchase price, if they breach on contract number one, remember the buyer can sue the pants off of them. The buyer can go after them for specific performance. So before they pull that termination trigger, they need to understand the legal consequences, the legal ramifications that contract number one has. Everybody with me? So it may not be in their financial well-being to terminate and accept this offer, especially if they get sued for specific performance. So remember, we got paragraph 23 that talks about breach by the seller. I would actually sit down and read that to them. And then when they started asking a bunch of questions, I would have them reach out to their attorney so the attorney can tell them as well.
And why would the seller care? Because they're not getting any of the money anyway. You know what I mean? They're not, they can't, they don't have the money to sell it. They're upside down. You know what I mean? So more
No,
than
we're
likely,
not on a short sale. We're not on a short sale.
okay, I'm sorry, sorry.
Yeah, yeah. This addendum should not be used in a short sale transaction. So we're instructed here to only use the short sale addendum. Yeah, and I apologize. I meant to point that out. So the backup contract addendum, we are under contract and another offer comes in. If you're presenting an offer that's already under contract, you need to include this backup contract addendum. And what this is doing, this is putting, and we'll look at it, but this is putting the backup buyer upon acceptance. The offer is negotiated like it always is. We're going to counter back and forth. We're going to agree on price, terms, everything else. Upon acceptance of this backup contract addendum, this backup buyer is put in a secondary position. And what this form says is if the primary buyer terminates for any reason, the backup buyer automatically moves into the primary position. Some sellers want to go for this because especially this market we just came out of, they're like, God, I want to open my house to showings again, where I had 50 showings in one day that resulted in, 45 offers. Not sellers didn't like going through that, understandably. Other sellers may say, nah, let's put it on the market, see if we can't get more money. Let's get the buyers back out there pitting against each other again. So again, this comes down to the seller. I present it, I have the seller weigh their options, but bottom line, if they accept a backup contract, of course, that's up to them. So we've acknowledged that the seller's already entered into a contract known as the primary buyer under the primary contract. The primary contract is currently pending, and that this backup contract is accepted in a secondary or backup position to the primary. It's a condition of the backup that the primary is terminated as described below before buyer and seller shall be obligated to perform. So when does the backup become primary? When the primary is terminated. And we'll see where we give that notice. Termination of primary, the different ways that the seller will need to prove to the backup that the primary is terminated, so they know they're in now in the primary position. In the event the primary closes, this backup contract shall become null and void. And here's the good news. Excuse me. The earnest money deposit shall be refunded to the buyer. So if the backup never becomes the primary, they're going to get their earnest money back. In the event primary is terminated, seller shall promptly provide buyer with written notice stating that this backup has become primary and evidence that the primary contract has been terminated. Again, this talks about the dates. I can't put an actual date in here because I don't know if and when the primary is going to terminate. So I can't say due diligence ends on this date. So we're going to do something similar to what we did with the short sale. Our due diligence period, we're going to put in a number of days. Our settlement date, we're going to put in an actual number of days. So it'd be like, 15 days upon being noticed that you've moved to the primary position. And then settlement's going to happen 30 days upon being noticed, excuse me, that you've been moved to the backup position. Same thing that we saw before. Instead of dates, just put in the contract, just put see attached backup contract addendum. So we're going to refer the dates in the contract to this form. Buyer's right to terminate. They can terminate without liability by giving up notice to seller at any time, and the earnest money deposit shall be refunded to the buyer. It's worth mentioning too that the backup buyer wouldn't owe due diligence until and if they become primary. So, again, all they have to put up front is earnest money. And if they never become primary for whatever reason, they can get that earnest money back. In the event, buyer must receive notice of primary from seller no later than 5 p.m. on this date, time being of the essence. backup shall become null and void and earnest money refunded to the buyer. Buyer signs on the left, seller signs on the right. And then the last page is the seller notifying the buyer that the backup buyer, that they're now the primary. So the seller's providing written notice. And in addition to that, we need to include the termination. And that's letting the backup know the primary. That's when the due diligence is due. That's when they can start their inspections and appraisal and loan approval and all that. Anybody done one of these backup contract? You have? Katie, okay, I got questions. Were you the listing agent or the selling agent? Which one? I can't hear you. You're not muted. Selling agent. So were you the representing the primary buyer or were you representing the backup buyer? Backup. And did you ever get to become the primary? No. So they went on to closing. The primary went on to close, but your buyer knew that they were they're standing right there in line. So, they had a shot. And again, I think we saw this happening a lot, this crazy multiple offer world that we were in, because you got 45 offers. I can only accept one, right? That means 44 were rejected. So that very well may be a good case where this buyer that really, really wants this house may consider doing something like this. I think it's important that we mention this form only allows for one backup buyer. So you can't have a backup to the backup and a backup to the backup to the backup, right? You can't line them up. You can only have one backup at a time. So if the primary terminates, the backup becomes a primary. Now I could get another one of these, right? But I can't have more than one at a time. Questions on that? Okay, let's take our last break. Come back at 9:40 and wrap it up for the night. Are we in for the last, what, 35 minutes? Do we do some jumping jacks or? No? Something, man, I would love to go outside, but it's just so blah. I mean, there's only all this blah the last couple of days. There's not even a half an inch of rain in my rain gauge. You know, you'd think with all this, there'd be like lots of rain or snow or something to make it worth it, but no, it's just blah. All right. Questions on the backup? Guys, keep in mind any of these addenda that we're talking about, we're just giving you a general overview of them and when you may need to use them. Please, 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 when you are ready to use them, please make sure you read them over and are familiar with them before you do use them. Make sure you know what they're about. I don't know. I make all y'all promise me that you never sign anything to a consumer to sign without you first looking over it and knowing what's in it. Fair enough? You guys promise me? Right hand up, say, yeah, Julie, I promise. Because remember what we said, they're not reading it. So if you're looking it over and you have questions, they probably will as well. So just make sure you're familiar with them before you use them. We, as we mentioned, maybe last week or something, earlier this week, we actually have multiple offer to purchase and contracts. So obviously the one that we spent our time on was standard form 2T. 2T is the one that we use with most single family resale, most resale properties. But in the event that you are dealing with, for example, vacant lot and land, we got a contract just for that. And the difference in the two, there's no verbiage in here about a property or a structure or anything like that, because now we're just dealing with dirt. We're dealing with a chunk of land somewhere. This note, I'll let you guys look through this, but this note tells us when we should and should not be using this form. So it kind of starts you off in that directions. It also has guidelines. So if you are doing vacant lot and land, you want to make sure that you're, looking at the guidelines to properly complete it. If it's new construction, then we're advised to use the offer to purchase and contract for new construction, which we will look at next. So if you're just selling land is when we're going to use this one. Again, we're not going to go through it like we did the other one. But similar, it starts with terms and definitions. We're going to start with defining things. Purchase price, there's due diligence, there's earnest money again, seller financing, still defining things. A lot of this is going to look familiar until we get to certain point. Buyer still has a due diligence process. You notice there's no paragraph here on fixtures or personal properties because we don't have a structure. We don't have a home, for example, but the buyer should still have a due diligence to do any tests or inspections on the land that they want to, such as a soil and environmental test, septic sewer test. They may want to do, if it can't hook to public sewer, they may want to do what's called a PERC test to make sure the land will support an on-site septic system. Water test, especially if we have a well water. Review of documents if it's in an HOA, appraisal, survey, zoning, flood hazard, streets and roads, utilities. So again, the buyer still has a due diligence, period. We're just not inspecting a property anymore. Now we're just inspecting land. Buyer still needs to represent how they're going to complete the purchase. Do they have cash? Are they going to get a loan? Do they have other property to sell before they can buy this land? Buyer's obligations, seller representations. Just make sure there's nothing else. It's just crazy different. I mean, that's really the big difference is you don't have properties. 7-day delay settlement instead of 7-day delay. remedies for breach, blah, blah, blah. Anybody use this one yet? Not yet. Give you time. Questions on this one? Vacant lot and land, offer to purchase and contract. Then we have an offer to purchase and contract for new construction. So we are going to take a minute because I also have, like, this is going to be fun. I have an offer to purchase and contract for new construction. And then I also have a new construction addendum. So we're going to talk about both together and determine when we need to use which one. Again, offer to purchase and contract for new construction. It comes with guidelines for completing. So you can get those through NCAR to make sure you're properly completing it. And then it tells us this form is designed for use when the seller has engaged a licensed contractor or is constructing a spec home on the land to be owned by the seller and then convey the improved land to the buyer. It is not for use when the seller does not or will not own the land, buyer owns the land, or buyer will provide financing. One of the bigger differences that we see in this form, you got the seller, but in addition to the seller's information, we're also going to need the general contractor's information. So who's going to be the one responsible for building? If it's not the seller, then we need the contractor's name. Who's going to be the one responsible for that? Describe the lot, the property, purchase price, all that we've seen before. In addition to due diligence, we have this pre-construction evaluation period. Construction sometimes is kind of built in stages. So when can we do this pre-construction evaluation? That's the time being of the essence. Need to define the dwelling, the property, earnest money deposit, that stuff's familiar. With new construction, you probably have a building deposit, and the building deposit may be broken down into different sections. So you put down X amount on this date or event triggering payment. So you could put something in here like when the foundation is complete, right? And then you do your next building deposit when the framing's up, right? So you could do like the different stages of construction, or you could put a date in. Building deposit is not part of the earnest money deposit and will be used by the seller in construction of the special improvement described above. Still defining things. I'm talking about pre-construction evaluation period. Again, getting the loan, a construction loan. Construction loans, again, are usually given out in like sections. So throughout different stages, the lender might release more monies. Various reports, whether or not they're applicable or not. There's our soil suitability. If it can't hook up to public, utility availability, environmental restrictions and permits, flood hazard, septic, architectural review, insurance. Need to address insurance on the property. The seller should have insurance until as they're building. Sometimes construction can get destroyed. Do I have anybody that lives in High Point? Any High Pointers on the call? There's a out 68, if you're familiar, they were building a, I think it's going to be like a pediatric dentist office. But anyway, they had just gotten the frame up and we had a big storm come through and it knocked everything, it leveled everything that they had done so far. So you just have to hope and pray that that developer, that builder had insurance that could, because they pretty much had to start from scratch. They had to rebuild. So that's rough. Street disclosures, that's important when you're dealing with new construction, whether or not the roads are public or private. Construction of the dwelling as we start to build. When are we going to get our building permits? Punch list items. Punch lists are what the builders go in kind of at the last minute. They take their blue tape and they put the blue tape on these last minute punch list things. Delay in construction. Delays in new construction are so common. It's got its own paragraph, its own provision in the offer to purchase and contract new construction. So just again, prepare your sellers, I'm sorry, your buyers. Buyers investigations, even though it's new construction, they should always be encouraged to have inspections, home inspections, wood destroying, radon. I mean, guys, humans build these things and humans make mistakes, and there's no such thing as a perfect home. Even brand new construction that they just put the doorknobs on, there's still no such thing as a perfect home. So I would think your buyer, encourage your buyer to have inspections. With new construction, there's a limited warranty of construction. It's an implied warranty by the builder. So this is addressing that, generally for 1 year, unless you're told otherwise. I mean, this gets down to the type of insulation, the R value of the insulation. It's pretty good detail in here. Buyer represents that they have to sell another property or not. They need to receive the MOG. The RPODS is exempt from new construction, but they still need a MOG. Buyer's obligations, seller's obligations. Back to the boilerplate stuff that we saw in 2T. So this is, again, offer to purchase and contract, new construction, 800T. So let's compare this to the new construction addendum. Which one we use depends on how far along in construction we are. If we've just started building, or if there's still a lot to build, we're going to use the offer to purchase and contract new construction. If it's complete or almost complete, we're going to use the new construction addendum, and we're going to attach this to the offer to purchase and contract standard form 2T. It all comes down to how far in construction we are. So if you're standing on dirt, or if you're standing amongst studs, we're going to use 800T. If we're complete or just about complete. And one thing this addendum does, y'all remember that very important sentence in 2T that says this property is being sold in its current condition. So unless it's done, this form addresses that sentence, because if the builder signs that, then they can stop building, right? So if there's still just a little bit left to be done, this form is going to override. Blue note, again, tells us when we need to use this form. And I do like this, it points this out. If construction of the dwelling is not complete, or if extensive additional improvements are to be made, then we need to use the offer to purchase and contract 800T instead of this form. So just make sure you look at those notes, just make sure you're using the right one. So we got a new construction attached to 2T. Again, we're going to get the general contractor's information, their license information. Here's the warranties again, the implied warranties provided by the builders. R value. Any additional improvements, like what else do we have to do? Have we done the punch list yet? Do we need to go through and do those things? Remember, we're awfully close to completion. As noted above, if extensive additional improvements are to be made, the parties should use the offer to purchase and contract new construction. So that's the second time it's given us that heads up. Completion of additional improvements, how they're supposed to be done, inspections, purchase price, building deposits. When you're dealing with new construction, you're probably going to have building deposits. And you remember in 2T, we had a place for the building deposits. Buyer signs on the left, seller signs on the right. I didn't point this out in the contract, but both in the contract and in the new construction addendum, the general contractor needs to sign as well. When the seller is not one and the same. So if the seller and the GC are different, they're going to sign. Acknowledgement of receipt of building deposit, just like we did due diligence. So new construction addendum attaches to 2T when it's complete or very, very close. Offer to purchase and contract 800T is when we still got lots to do. We work with a couple builders, and I remember a couple years ago, I mean, maybe the studs were up. It was still had a lot to go. If the studs were up, they were like going up. We didn't have walls, you know, we didn't have floors, we didn't have ceilings, we didn't have any of that. And the agent submitted an offer on 2T. The buyer's agent. No addendum, no nothing. And I hate to say it, but if that builder wasn't represented by an agent, like I said, how easy for it to be would be for them to sign and then say, well, I'm done because this says that this property is being sold in its current condition. So, you know, we went back to the agent and said, you need to present on the proper form, please. I hope that was a learning experience for that agent. What a terrible position to possibly put your buyers in if it wasn't a good, honest builder working with agents. Questions? Comments? We're so quiet tonight. Is it the excitement of the closing disclosure and the forms? And it's been a big night, hasn't it? Keep in mind too, some builders, yeah, I hear you. Some builders may have their own contract. So can we use a builder contract? Can we as agents use a builder contract? Sure, as long as it meets that commission rule. Was it A.0112? The last forms we have, we might start using again. If the buyer is going to assume the seller's loan, if the buyer is going to assume the seller's loan, which means they're just going to start taking the payment over. The seller would have made the mortgage payment on December 1st. We go to closing on December 7th. The buyer makes the payment on January 1st. They just take over. It's going to be an assignment, which means the terms are going to be the same, interest rate, payment, how much is due and when. If the buyer is going to assume the seller's loan, then they still got to, go through the same approval process that they always would have to if they were going to originate, right? So the lender needs to make sure that they are able and can assume the seller's loan. So we have to have some information about the loan to be assumed. What type of loan is it? It's a fixed rate, fixed interest rate, or is it adjustable rate? What's the approximate unpaid balance as of this date? Loan payments are currently X amount per, usually month. What all that includes, taxes, insurance, PMI. When's the final payment of the loan? How long do we expect this loan to go, and the loan number? Who has the loan? Buyer intends to assume the unpaid principal balance of the existing loan for the remainder of the loan term at the interest rate set forth above, with buyer paying all mortgage loan assumption costs and discount points. Buyer is advised to determine prior to the expiration of the due diligence period the amount of the balance, the cash due at settlement, whether the existing loan is assumable, that the buyer qualifies to assume the loan. Buyer's responsible for all loan assumption costs. Seller shall have no obligation to pay any loan assumption costs unless specifically provided. Unless otherwise, the escrow account and lender stock or capital account required in connection with the loan shall be purchased by the buyer. Buyer's going to pay any prepaid insurance based on the proration. Seller's obligation is contingent upon the seller being released from the liability to assume loan. Again, the lender's got to approve all of this. Buyer's advised to determine prior to the end of due diligence whether or not they can do this. If it's a VA loan, buyer must assume seller's potential indemnity liability to the government for the payer of the loan. Remember, vets get one entitlement. A non-vet can assume a VA loan, but that entitlement or that entitlement's still out there. So the vet needs to be aware that they still have that entitlement out there until it is paid off. Buyer signs on the left, seller signs on the right. Anybody done one of these yet? I bet you if I come back and ask you guys 2 years from now, more hands will go up. I think we're going to start seeing this. So get training from your BIC, training from your firm. Make sure we're proceeding properly. And then the last one, seller financing addendum. Regulations are in place that might impact seller's ability to do seller financing. Seller and buyer are advised to talk to legal counsel prior to signing. Seller agrees to provide buyer with seller financing in the amount set forth. Seller financing shall be evidenced by a balance of purchase, money promissory note secured by a balance of purchase, deed of trust. This deed of trust is going to be the first lien or the second lien on the property. If it's going to be a junior to another deed of trust, the principal amount of the senior lien shall not exceed the amount. Seller financing shall bear interest prior to the default in the rate of X amount. Repayment penalties or fees. In the event of buyer's default, seller's remedies will likely be limited to foreclosure of the property. If the deed of trust is given to secure seller financing, is subordinate to or is later subordinate to senior financing, and such senior financing is subsequently foreclosed, seller will likely have no remedy to recover under that note or deed of trust. Once again, advised to talk to an attorney prior to moving forward. So, I mean, that's the big takeaway I just took. If you're going to do one of these, we need to get attorneys involved, particularly with the seller. They have a lot to lose because in North Carolina, seller financing, they don't get to stand in line for that priority of when they're going to get paid. So unfortunately, as this just kind of warned us, if the seller's out, then the seller's out. So I think that's pretty risky for a seller. You still see this around though. I mean, every once in a while you see a big sign on land, 50 plus or minus acres for sale, seller financing available. So, I mean, you still see some of this. Anybody ever done this? Seller financing? You have, Karen? Have you? A lot? Really? Would you be willing to share something? You have more experience than all of us put together, I have a feeling.
I don't know how much I can tell you, but I mean, I do it a lot. I think it's good for the seller in that they get interest payments on top of the asking price. So,
Yeah.
and if they don't get paid, then they do foreclose, they get it back and they get everything they've been paid. So it's a pretty good deal. It might be risky, but financially, I think it's beneficial.
If it works out.
Yeah.
Interesting. Thank you. I don't know if this is something we're going to see more of or not. I'm not sure if this is something, but is that a Virginia thing that you do that, or you do that down here too?
Well, I don't think I could do much in North Carolina.
Come forward. We
I
can,
said, I don't think I can do much in North Carolina. Everything has a former attorney has to do it. So I'm gonna be very limited in what I can do in North Carolina.
your attorneys in Virginia are gonna come down to North Carolina, it sounds like, because we
Yeah,
gotta use them
me
for
too.
everything.
Yes.
Interesting. Well, I do just want to, now that we've talked about that, let me just, one more thing real quick as a quick reminder. When we looked at 2T the other day, remember, as part of our payments, if it is seller financing, this could be a down payment that's going to show up as a credit to the buyer. We're instructed to use the seller financing addendum. Same thing with the loan assumption. So those addenda, the seller financing and the loan assumption, are going to address some kind of down payment, possibly even in addition to due diligence earnest money. I think it's going to be really rare. I don't know of a single situation where every single one of these lines is going to be used, but you very well might have, you know, seller financing with, I don't know, new construction or something, you know, so you might be dealing with several different addenda. But again, when the need to use an addenda arises, loan assumption, seller financing, building deposit, here's our new construction addenda, it directs us to that applicable form. Questions? Comments?
Back on the seller financing addendum.
Can you come forward? Does that help? Nope. Can you guys hear? Or is it just, is it, no? Okay. Something with your mic. Can you type? I know, it sounds like that's, I know. Sorry about that. Because you're unmuted when you do that, but for some reason it's just not picking up. Okay. So, guys, that's it. We've been through the material, and I know that we've been through a lot. So what does tomorrow night look like? I do have a review for us. I'd like to go through it pretty quickly. You know, the quicker we can get through the review, the sooner we can get you guys started on your test. The latest I have to get you started on your test is 7:15. So let's be on time tomorrow so we can get started right at 5:15, get through our review, help get you in the right mind frame to take that test. I'm not reviewing math tomorrow. So in class, we're just reviewing the material. So if you're working a closing disclosure or a proration problem, remember that worksheet I gave you guys yesterday? I do have that in our Campbell folder and Learn Test Pass, plus the solutions. By the way, Allison, I fixed it so your cents come out and we're not we're not off by rounding. So that was just for you. I know it drives me nuts too. But you do have this practice here. And then, like I said, I did put the solutions in. So this is obviously me working the problem out, but it gives you the answer and everything. Our cheat sheet that I can let you use up until 7:15-ish tomorrow. I cannot let you use this for the test, but if you need last minute, who pays for what? And don't forget too, there's these little quizzes. I think these are so helpful because it kind of gives you the, not only is it right or wrong or why. So each little section in Learn Test Pass. So just, you know, I know some of you guys may have to work tomorrow, but hopefully you can still get an opportunity on your lunch break or something to look this stuff over. So we'll come in, we'll do the review. We'll call it a rapid review. We'll get through it. We'll go over the rules and expectations for my exam, and then we'll be ready to do a little check-in, and then we'll be ready to go. So how's that sound? Good? 5 down, 1 to go. Guys, I'm serious when I say I'm around all day tomorrow. So if you're stuck on anything, if you have questions, tomorrow's the time to ask. May not have much time for questions tomorrow in class. So we can get you guys started and get you out. Okay. All right. Well, you get 5 minutes tonight. So I kept you over 2 last night. So I hope this makes up for it. So you guys have a good evening. We'll see you guys tomorrow and we'll wrap this up. Hard to believe, isn't it? Good night.
Thanks. Right.
Thank you.